Good morning, everybody. Welcome back to another episode of the Market Open. It is Thursday, April 24th, 8:47 a.m. We are live. And we got some green, folks. We have a continuation of the green that we had yesterday. Yesterday, we had a lot of green. And then the green kind of not completely went away, but a decent chunk of it went away. And it was a good day still. S&P up 1.5%. And, well, we are continuing some of that momentum right here in the pre-markets as we continue to go green. Now, we have a bunch of companies today that reported earnings in the pre-markets. And unfortunately, a lot of them didn't give us guidance, which is also causing some of the volatility that we're seeing right now in the pre-markets for some of these companies, like an American Airlines, for example, down about 1%. Took away their guidance. Southwest yesterday just had a bad earnings. They were down 3%. And the other airlines were up after hours yesterday, but Southwest just didn't have the best earnings. We did have some companies that did have a really good earnings yesterday, like ServiceNow. We'll talk more about those. That's up 9.14%. But the big earnings that we have today is obviously Google. We had Tesla the other day. Tesla here up about 0.5% in the pre-markets. Google today after hours is going to be the big one that we all are looking at. Google also down a little bit in the pre-markets. GM's down a little bit. Ford's down a little bit. Nvidia's up a little bit. Palantir up about 1%. Robinhood right here up about 0.5%. Not really a trend that we're seeing today so far. Nothing super green, nothing super red. It might be one of those days where things go flat, which is unique given every day it's either super volatile up or down. But that's a little bit of what we got going on in the pre-markets. We got some new headlines about Trump. As always, we have some Fed talk. We got macro data today. Scott Bessent and Elon, there was a very interesting story in terms of what happened yesterday and their relationship or their lack of a relationship and who Trump chose when he had to finally make a decision. So we'll talk about that. The tariffs, if you were on the market close yesterday, we got some updates that said that, like, we are not going to put the tariffs on China, but then we had updates that we were, and then Trump kind of walked it back, but then he walked back what he was walking back. So we'll talk about all that. I think the markets yesterday were just kind of confused at this point, and they didn't even react, go up or down after we got those messages from Trump in some press conference he did when he was signing executive orders, because they were just like, they're like, all right, dude, whatever. At this point, Trump is going to say whatever, and the markets just have to react to it. So, like, some of it's kind of good, some of it's kind of bad, but I think right now the markets just don't care. So that's what we have going on. Oh, Intel reports today? I didn't even know that. Hold on. We have Google today. What else do we have? I forgot we had Intel. Yeah, you're right. Google, Intel, T-Mobile. Those are the main ones. Okay, cool. Google, Intel, T-Mobile. That's what we have today after the bell. Thank you, everybody, for being here. Midwest, finally, some Trump news. Yeah, finally, right? We don't have enough Trump news. June, I'm Beneficial. What's up? Broccoli Bob, Misha, Matthias, thank you all for being here. Jay, KM, good morning, good morning, good morning. DJ, Andy, Ray, Brandon, Jager, Mike, thank you all for being here today. Canada is happening on Saturday, so I'll be getting my flight today. Market close will be starting earlier today at 3 p.m. We're going to be ending at around that 4:20 time, so we're not going to be listening to Google, but we'll try to get Google results. And then we're going to have to end it around that 4:30 time. But yeah, we will be starting the market close a little bit early today, given we're leaving a bit earlier as well. Elaine, good morning. Corey, Frank, Charles, Aaron, what's up? What's up? What's up? Thank you all for being here today. Dylan Rogers, what's up, man? Charles, Midwest, we need NYC round 2. We are going to do that. I don't know if it's going to happen anytime. You know, maybe it's in the summer. Maybe July we do NYC round 2. Because in the summer, I think we could do like multiple meetups in a month because it's not going to be as hectic. So yeah, maybe we will do. I was thinking of it more in the fall, but it would be fun. New York City in the summer. So I think we can definitely get that to happen in the July, August time. Mike says, I've been listening to Amit for years, and first time dude said Mike. Okay, I've definitely said Mike before. There's no way I've not said Mike before. But I appreciate you being here every single day and being here for the past couple of years. Okay, I think we have some Fed talk right now, or someone's talking and they're saying stuff, and that's creating some headlines. Are they? Did someone say something? I think we just got a headline of someone saying something. Let me see. Fed's hammock. Oh, this is a Fed president. He said, okay, Fed could move rates in June if data is clear about the economy. Fed is not afraid to move quickly if necessary. There it is. Okay, cool. Good. That means something, right? That means we're going to have rate cuts, right? Dude, at this point, everyone's just getting so tired of this. Everyone is so freaking tired of the conflicting narratives going up and down and backwards. And first, we're going to take off the 145% tariffs. Then we're not going to take off the tariffs. It's just, it is so wild, dude. Every single time. Yeah, this is good, I guess, that the rate cuts will happen in June. This market is the most headline-sensitive market I think we've had ever. It's a tweet-driven market, right? That's what it is. It's a tweet-driven freaking market. And that's currently where we are right now. Did we get jobs data? Oh, we did. Today's Thursday, initial jobless claims. Okay, let me pull that up real quick, and then we'll get into all the headlines that we have. We did get initial jobless claims. Were we good or bad? Let's see. We usually get those every Thursday. Jobless claims, it was what we expected. Market wanted 222,000 jobless claims. We had 222,000. It's up 6,000 week over week, but overall nothing aggressive against expectations. So this data, not something that's really going to move the market. Again, we got to see this closer to 350 to 375,000 for it to qualify as a recession. Obviously, if it keeps getting higher and higher, then like there's a more likely shot that we're getting to a recession. But as of now, it's not really there right now. Trump is scheduled to speak around 12 to 1 p.m. I just saw that. That is correct. Trump is scheduled to speak at 12 o'clock about something. Dude, he did an impromptu press conference yesterday. Like literally freaking the reporters were running to his press conference when they announced that he was going to do one. This is what Carolyn Levitt posted. You see all these reporters, they're all just running to go see Trump at 11 a.m. That's when we were getting those quotes at 11. And I was like, where is he talking? Like, what's going on? It was this impromptu conference that he did. And that's where you got some of the quotes. Here's one of the things he said in that impromptu press conference around tariffs in China. And then we'll get into some of these stories and talk about what he said yesterday as well at the 5 p.m. executive order.
Clarify, Mr. President, on China. Are you thinking about lowering their tariffs?
Fair deal with China. It's going to be fair.
Are you talking to them actively now?
Actively. Everything's active. Everybody wants to be a part of what we're doing. They know that they can't get away with it any longer, but they're still going to do fine. And we're going to have a country that you can be proud of, not a laughing stock all over the world for many years. You know, in 1913, they traded to the income tax system. We used to be all tariff, and we had no income tax, so we had the wealthiest country we've ever had proportionately. From about 1870 to 1913, it was all tariffs, and we had more money than anybody. They had committees how to spend the money. They had so much money they didn't know how to spend. Then some brilliant person said, let's go income tax. Let's let the people pay. Now, we're going to be able to substantially lower taxes when this is finished.
So Trump, again, going back into the archives of American history to figure out how we used to finance everything. And that's the new paradigm he wants to put us into. So let's start off with some of these first stories and get into it. We actually do have some updates in terms of tariff revenue that the United States has collected. And then we'll get into all the other stories that we have. Again, thank you everybody for being here. Someone said, are you coming to London in the summer? Yes, that is the plan. London is the plan. I think London and France. So hopefully in that June, July time, we'll be able to do that as well. And that will be good. And then someone says, why was Grab up after hours? Grab appointed someone to their board of directors who specializes in M&A. So I think the market was thinking, hey, that person might help them get the GoTo merger done if they're actually going to buy GoTo. GoTo is one of their biggest rivals in Indonesia. And also the 450 May 2nd call got a ton of premium. I think it was like $150,000 of buying on it. And that expires like in the next week. So that could have been some of the reason for why you saw that volume after hours as well. Okay, cool. Let's get into it. So let's start off with this first chart. Tariffs. We'll talk about what Trump said yesterday in the context of tariffs, but this chart is a chart that was updated yesterday. The United States has now collected about $15 billion in the month of April. Revenue from customs tariffs spiked more than 60% in April as the first of President Trump's fresh tariffs took effect, bringing in at least $15 billion. Now, this is good, right? $15 billion. That's amazing. It's a decent chunk of money. The problem is, what are we going to do to be able to get these $15 billion, or what are the downstream effects? And I think that's something that Trump seems to not care about too much. I mean, he cares about the actual money that we're bringing in and what that money is going to mean for the broader economy, which is fair, right? Because you're bringing money. That's why he keeps saying we're getting rich every day. The problem is, if this $15 billion resulted in unemployment, if it resulted in higher prices, if it resulted in small businesses shutting down because they can't afford to pay the tariffs that some of these countries are paying or some of these companies are paying, then inevitably the downstream effects of this are going to be negative. Maybe they're not. We're going to have to see. But these types of numbers, if you super believe in the tariff thesis, you're happy to see. The question is just what impact, what side effects, I should rather say, do we get in order to get the 15 billion? And then obviously it goes without saying, the stock market has lost about $10 trillion in value since the tariff paradigm was introduced to the world. We collected 15 billion in April. It's like, all right, you lose, $10 trillion, you collect 15 billion. Even if that 15 turns into 500 billion, was it worth it? Right. And I think that's the broader question right here that everyone's trying to get an answer to. Now, what did Trump say yesterday about the tariffs? Well, after he signed his executive orders, he had a bunch of questions that he answered. And unfortunately, he didn't say the things that people wanted him to say to get more momentum on the tariffs. So right before he went live, the Financial Times reported that Trump is going to exempt steel and aluminum from tariffs, which we have 25% on 12% on Mexico and Canada. And he was going to exempt car makers from some U.S. tariffs. GM and Ford were literally up 5% after hours based on this headline. Then we get into the tariffs. And here's the first thing that he says. I have not brought down the 145% tariffs down on China. AKA, he's saying, hey, I said we would take down 145% tariffs on China, but I haven't done it yet. And the tone in which he said it, you could kind of tell that Trump was just like, don't worry about China because we haven't really done anything on them yet. So it's not like we've gotten rid of the tariffs, which was a totally different tone. It was a 180 from 2 days ago when Trump said, oh, we're going to be bringing down the China tariffs substantially from 145 down to, they didn't give an exact number, but they said it would be down substantially. So I don't know if he saw the media and if he saw people said he was caving or yada, yada. But yesterday's tone was like, nope, I haven't taken it down yet. I'm still thinking about it. It's going to take us a couple of weeks. But right now he made an effort to tell everybody it's still 145%. And so markets started getting confused. We started seeing some red. We didn't see really a tanking after hours based on that because I think the markets have concluded, look, he's shown his cards. There's no way we're going to have 145% tariffs. We already know this is not possible. It's not sustainable. So at this point, we're not even going to go down if Trump tries to reverse and sort of walk back that he already did. Because at the end of the day, we know that these tariffs are going to be gone. But it was really weird because, a reporter just asked a simple question of like, hey, the tariffs from China are coming down from 145%, right? And he said, nope, we still have them for now. Eventually they'll come down, but he kind of made the point of like, hey, we haven't taken it down yet. And I don't know if he thinks that's giving him leverage, but it is one of those things that, again, created market instability. Then we have these three quotes from him. He said, I haven't personally talked to Powell yet, but I might call him soon. It's time to lower rates. So you might have Jay Powell and Trump actually get on a phone call where Trump tells him that it's time. I don't know if that's going to change Jay Powell's opinion. Also, by the way, if he wants to talk to Jay Powell, he'll just tell Besant to go to their weekly breakfast and tell him everything he wants to say. So I don't think he'll actually call him, but he did say he might end up engaging that. And then he talked about Elon. He said Elon is brilliant. He deserves to go back to Tesla whenever he likes. We'll talk more about Elon in a second, but he basically underscored everything Elon said on the earnings call about how he's ready to leave. And he set up the infrastructure for Doge and he can go whenever he wants to. And then he said on Canada, I love the Canadians and Mark Carney is a nice guy, but it is costing us too much money to support them. He doubled down on the 25% auto tax we have on Canada. Financial Times was reporting that we were going to get rid of that. Trump made no clarification of getting rid of that, which means GM and Ford went down 1% after hours from going up 5% because it doesn't seem like those auto tariffs, those steel tariffs, those aluminum tariffs are going away anytime soon. So, I mean, there's just a lot of different things happening back and forth. There was a big piece written in the Wall Street Journal's editorial board, which is not MSNBC. It's not CNN. The Wall Street Journal typically is on the side of conservative administrations. They've usually been a media publication that actually tries to support the conservative president. They ripped Trump yesterday, bro. They came out yesterday and they said, dude, this guy has no freaking clue what he's doing. And he is absolutely either caving, he's pivoting back and forth. Besant's telling him things last minute on how to navigate this stuff. He has no idea like how to strategically create some type of a plan. And they ripped him to pieces yesterday in that report. And the reason for that was they simply don't believe that this administration actually has a plan in terms of what they're doing. What this administration does have a plan on is how to pump their meme coins. The Trump meme coin yesterday, if you missed this news, is up about 40% because if you are in the top 220 holders, You will be invited to a private dinner in Washington, D.C. on May 22nd, given you connect your blockchain address to their official Trump meme website, and they can verify that you are in the top 220 holders of people that own the Trump meme coin. Given that Paul Atkins is now the head of the SEC, he is not going to be investigating this. He's not going to be investigating a lot of crypto stuff, which is good for the broader crypto industry. It gives them room to innovate, yada, yada. But it also allows Trump to, do stuff like this. And, there's certain things Trump does that I love. This stuff I cannot stand. I mean, I really cannot stand being the president of the United States and grifting with a meme coin. I think the one thing you can say is that other presidents have been corrupt before and they maybe done it under scenes. Trump is just doing it transparently. I guess that's the silver lining right here. He's doing it for everyone to see. And given the people he put in the White House, there's not really any way that that he's going to get caught or he's going to get prosecuted for it. So I don't know, dude. Obviously, I don't like the meme coin stuff. I think it's stupid. And the reason I don't like it is because the people that are getting rug pulled on it are the most vulnerable people. Like if you really buy a meme coin, you put your life savings into it. And people do this stuff, bro. Like people, there are people in the world that they just like, they will, if someone messages them to invest in some crypto coin, they will get into it, right? I get so many messages every day of just like, hey, is this you? And there's like all these fake accounts on Twitter that are impersonating me. And I'm like, no, it's not me. And people legitimately think they're like having a conversation. And then this fake Amit is trying to sell them on some crypto coin. And it's like, people do this stuff. And when you got a nation of 150 million people that potentially will buy into something because they think that there's some potential here, especially if it's because it's associated with Trump, you get people that get rug pulled. And so from that perspective, obviously it's not the best thing in the world. And amidst all the tariff volatility, that yesterday was just not something I think people wanted to see. But in general, the market is still lacking the clarity on how we're going to be navigating tariffs. Now, as I'm saying all of this, it's not all doom and gloom because obviously markets are somewhat trying to find a way to recover. The sustainability of the momentum that we've had over the past couple of days, I think, is contingent on actually announcing deals. We keep saying we're close. Like, here's another reason why there's so discrepancies. Scott Bessent says yesterday we're talking to 100 countries. Trump, after hours, when they say how many countries have reached out, he says 90. And it's not like there's that big difference between 90 and 100. The problem is people feel like they're just making shit up. That's the problem, right? People feel like they're just making shit up. You mean Amit isn't messaging me to buy XO12AR? Yes, Amit is not messaging but people reach out to me and they're like, hey, like one guy actually bought it. I think it was like 5 months ago or something. He's like, hey, I bought this thing. And I was just like, oh man, that's not me. I'm sorry that you bought this thing, but he only lost $75, which is good. But still, $75, dude, like because you randomly bought a meme coin. And so the point is, like, when Bessent says 100 countries, Trump says 90 countries, there's discrepancies in the overall understanding of like, hey, what are they doing? Are they just making up these numbers? Do these numbers have any like real impact to them? And I think that is also what gets people upset. Regardless, we've got a market that I think, the one good thing about this is the markets weren't down yesterday and futures flipped green and the stock market's green right now. We'll see what happens when we open at 9:30. And I think part of the reason is because the market was like, you know what? At this point, he's already walked back so many things. Even if he tries to walk back the walk back, we know he doesn't have the leverage to continue doing this, especially if the bond market starts screaming. Yields were going up yesterday after hours. Let me check the 10-year right now. We are currently at 4.323. Okay, so it's starting to come back down, which is good. And I think the reason it's starting to come back down is because we're starting to have a market that says we just don't believe it anymore, which is actually kind of good for equities. Because at this point, if we get volatile dips, I mean, who doesn't believe that Trump is not looking at the stock market? I think he's looking at it every day. I think Lutnick, Bessent, they're looking at it every day. And we've seen him pivot 2 times already, once with a 90-day pause, second with getting rid of the 145% tariffs. And the reason for those pivots were primarily because markets were crashing and yields were going higher. And so my idea here is now if we continue to see really hardcore volatility, you buy the dip. You just keep buying the freaking dip. Because what else can you do, right? Like at this point, eventually Trump is going to fix all this, even if it's not soon, because I don't think he wants a recession. I don't think he wants to get crushed in the midterms. And we've already seen him try to fix it multiple times, and we've seen the market rally. So if the market does give us NVIDIA at 80 again and we don't have a recession, like obviously I think at this point, it's just another buy the dip. Chris says, wait, the Nigerian prince I sent money to isn't going to share his inheritance with me. Yes, that is correct. They are not going to share any of your inheritance. You guys are making so much fun of these meme coins. Dude, it's a real thing, bro. And I spend, I would say, at least 20 minutes a day deleting the YouTube meme coin spam comments on my videos. Like you'll post a video, you'll go back to it 30 minutes later, you'll see the comments, and there's like 50 of these, and they try to be smart, dude. The first sentence will be like, nice video, not a criticism, but have you considered thinking about blah, 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 meme coin? And you start reading it because someone's saying, hey, nice video, not a criticism, but, which sets up a hook of like, okay, I'm curious what this person's going to say. And then they go into this paragraph about why Mrs. Lauren Summers' trading strategies have made them $40,000 in the past 6 months. And it's because of blah, blah, blah. It's like, oh my God, dude, how is Google not solving this? And then you realize, oh, Google's not solving this because I'm spending more time on YouTube deleting these stupid comments, which is what YouTube wants, is to keep people on the platform. But this is not the way, bro. This is not the way to keep people on the platform. So yes, and it is for censorship. Exactly. I appreciate that you delete them, bro. Most people keep them. No, it's just that because comments are a big part of a video, right? Just like the chat, you want to be able to read it. And so people go to the comments to see like what the feedback is on a video. And then when they see all this meme coin stuff, it just ruins everything, which is, you know, just not a pleasurable experience. Now, what happened with Elon and Besant yesterday? So we talked about this on the daily recap. We talked about it on the market close as well. But for those that missed it, Elon and Besant got into a shouting match a week ago, which now explains why Elon ended up unfollowing him on X. And what was the shouting match about? Well, apparently Besant wanted someone to be in the head of the IRS. Elon wanted someone else, and they got into it. And the White House confirmed that they got into it. Besant slammed Musk's over promises on Doge and under delivering plans. And Musk called him a Soros agent, and he called him out for having a failed hedge fund. The White House, when confronted about if this happened or not, Press Secretary Caroline Leavitt said, there are disagreements sometimes at the White House. That's a part of any healthy debate and policy process, and everyone here knows they serve the president. She was then asked, who did the president pick? And she said, well, they're both here, aren't they? Meaning the president didn't really pick one or the other. He is happy with both of them. Now, he ended up picking Besant's choice for IRS head. So he didn't go with Elon's choice, which means it seems like Besant has a lot more influence in this, which makes sense, right? Besant is the Treasury Secretary. Elon still has to run his other companies. So it seems like Besant is the guy that's like able to get through to Trump, him and Lutnick, but more likely Besant, given I haven't heard Lutnick speak in the past couple of weeks, but I've heard Besant speak a lot. And so, yeah, Elon and Besant getting into it. I don't think it has a real impact on the administration, but it means there is a lot of diversity of thought. And obviously, Elon is not a fan of Besant for the Soros connections and what he thinks is a failed hedge fund. And Besant is not a fan of the fact that Elon's been promising all this stuff with Doge. But, you know, it went from 2 trillion to 1 trillion. Now it's going to be about 150 billion. Elon confirmed on the earnings call as well in terms of savings, which is good. But it's not really making that massive dent that a lot of people thought it would make based on what Doge would do. So both of them going back and forth. The media called it a WWE match. Yeah, it essentially is, dude. It's an amazing storyline to kind of see this play out. Tanner says Besant won. Yeah, I do think Besant won as well. But, and Trump obviously thought Besant won for picking his IRS head. But it's just wild because these are the different forms of narratives that are now in the White House. Trump has to be able to synthesize who he likes on certain ideas and who he doesn't like. And I think Besant is becoming someone he can start trusting a lot more. The question is just how much impact will that have on the overall pursuit of tariff policy at the end of the day. China just put out a statement. Here we go. So China kind of confirming what I thought and what I think a lot of people thought was going on. China Foreign Ministry spokesperson says China and the U.S. are not yet in talks on tariffs. China will fight a tariff war if we must. Respect is the condition for any talks to happen. Trump has said repeatedly, not Besant, Trump, that China has reached out many times. And yeah, that hasn't happened, apparently, according to China. Now, either you believe in Trump or you believe in China, but the China Foreign Ministry says, hey, we are not in talks yet. Trump said a couple of days ago and yesterday, the Chinese have called us multiple times. That doesn't mean negotiations have necessarily started, but his argument is, hey, like he's trying to say, hey, they've called us, but we haven't really begun the conversations. The Chinese are saying we haven't even started. Like, we're not talking to these guys yet. I imagine the talks are going to start soon, given the 145% tariffs have now been walked back. But, you know, the question is when. And until those tariff talks begin, then I think that's going to be something that creates more volatility. Besant did give a comment yesterday that a trade deal would take about 2 to 3 years. The market was dipping yesterday after that around 11, 12 p.m. But the reason that headline was misconstrued is because the overall balance of the trade deal would take about 2 to 3 years to close, but the trade deal framework itself would be closed, he said, a lot sooner than that. So we should be getting a deal, I would say, in the next couple months. Realistically, by the end of June, hopefully mid-June, we get that deal done, or at least the framework of that deal, even if it takes a couple years to get the overarching part of the deal done and in place. Now here is a chart that came out yesterday. This is a chart of retail net buying of S&P 500 single stock. So in the midst of the tariff volatility, in the midst of what Trump is saying, in the midst of what China is saying, retail continues to buy the dip. This is the fastest in the past 12 months that retail traders have gone on to buy the dip. And this dip is in particular for stocks inside of the S&P 500. So yeah, I mean, I'm part of this. You guys are part of this. I mean, all of us are going down with the ship at this point. I think there's not much you can do unless you're cash or you're short the market, where if you have excess capital and you get names that are on a massive discount, eventually you think we'll have major pivots. We've had 3 pivots in the past couple of weeks, one that caused the S&P 500 to go up 10% in 2 hours. And so I think to deny that we're inevitably not going to get a pivot is silly, because we are going to get a pivot. It's just the whiplash in the midst of the inevitable pivot that we all have to learn how to deal with. And as a result, hopefully buying the dip will end up making more sense. Retail's in dumb money. Hopefully not, dude. I mean, retail hasn't been dumb money for the past couple of years. Retail continuously bought the dip for the past couple of years. I mean, if you bought the dip in 2002, 2003, 2004, like, it eventually worked out, but it took a long time for those dips to pay off. And then you have to deal with 2008 as soon as it started paying off. But over the past 5 years, I mean, if you bought the dip in 2022, you immediately got rewarded in 2023. So the question is just going to be if that dip buying in 2024 ends up paying off as much or in 2025 pays off in 2026. We have some macro data right here. We have March durable goods. Let me pull here and see what we got, and then we will keep going from there.
To Squawk on the Street, Rick Santelli here live at CME HQ with the breaking news on this Thursday morning. Initial jobless claims expected to be 222,000, coming in exactly as expected, 222,000, which means it is up 6,000 from a slightly revised 216,000. Continuing claims for the week ending April 12th, 1,841,000. That's about 20,000 lighter than expectations, sequentially lower than the 1,878,000 in the rear view mirror, and 1841. How does that compare? Well, that would be the smallest amount since May of 24. So that really is rather interesting that we go back that far with regard to continuing claims. It really shows more than anything that both these variables, especially initial claims, are very well behaved. Our preliminary look at March durable goods coming in extremely strong, 9.2%. 9.2%. That would be the best since July of 24. You remember that month? That was 9.8%. Very healthy. But strip out transportation and it all disappears. Zero. Goose egg. We're expecting up 3/4%. Unchanged. Zero. And zero, well, how does that comp? Minus 1.4 in Jan of 22 would be our comp on that. So it really does go back a ways. Now let's consider if we look at capital good orders, non-defense X aircraft, that comes in 1/10, up 0.1% as expected. And if we switch from orders to shipments, up 0.3, that's better than expected. And that follows that very robust up 0.8 that gets downgraded to up 0.7.
That's actually not bad. That is not too bad. So durable goods, 9.2 versus 1.6. If you take out transportation, you have a different set of numbers. When we have durable goods in a world where we have official tariffs, which we've not had for more than a month yet, then I think we'll have a better understanding of what durable goods looks like. But that's not horrible. And I think the market right here is up in the pre-markets, even if it's up slightly, because it's not having a visceral reaction to the downside on these numbers. Even yesterday, PMI and services, manufacturing and ISM, they were both green. Or I think services missed by like 0.4 and manufacturing beat by like 0.7. So the overall beat by 0.3, but it wasn't a horrible read. And it was kind of the data that we needed on a day like yesterday to maintain some of this momentum, as we are continuing a little bit of it right now in the pre-markets. Now let's talk about earnings. A bunch of companies put out some earnings data today. And we're going to look at the earnings themselves, but three of the companies, Pepsi, Procter & Gamble, and American Airlines, unfortunately, they took back their guidance. So Procter & Gamble said price hikes are likely as Tide owner cuts outlook due to tariffs and uncertainty. Pepsi says we are cutting our earnings forecast as it predicts uncertainty in tariffs and consumer spending. And then American Airlines withdrew their 2025 forecast because of a quote unquote murky economic outlook. So you do have three companies in the consumer space, three important companies in regards to prices on goods and services, whether it's travel or everyday goods like Procter & Gamble, that are basically saying, hey, we can't really guide because this tariff volatility is a bit more aggressive. Now, in terms of their stock, let me give you guys the numbers and then we'll see what the stocks are doing right now. So Procter & Gamble, this stock is down about 1.3%. Procter & Gamble beat by 1% on EPS, 154 versus 153. They missed by revenue, or missed by 2% on revenues, 19.7 versus 20.1 billion. So missed on revenue very slightly, beat on EPS very slightly. American Airlines beat by 12%, 59 cents versus 67 cents expected on American Airlines. That one's down about 0.5%. Revenue, they missed very minuscule, 12.5 versus 12.56 on revenue. So not a horrible quarter, but they slashed their guidance. Then we had Bristol Myers Squibb. They beat EPS by 20%, 180 versus 160. BMY right there, down about 2% in the pre-markets. And on revenues, they beat by 5%, 11.2 versus 10.7. So they beat on revenues, beat on EPS. And then you had Pepsi, which missed on EPS by 1%, 148 versus 149. Pepsi right here, basically flat. And they beat on revenue 17.9 versus 17.73. The takeaway from all this stuff, outside of the fact that the guidance is starting to go away, is that pretty much every company so far, and I think about 110 of the S&P 500 companies have reported, I would say, I don't have the exact number on this, we'll get it soon, but I would say around 65 to 70% of companies have either beat on earnings estimates, which is important because that's how we get a multiple on the S&P. We need to have stronger earnings. And if they've missed on revenue, they miss very slightly. Like, I'm not seeing companies that are missing by 7%, 8%, or the revenue is like 12 billion. They come in with 10 billion. Outside of Tesla, Tesla did miss on revenues by 2 billion. But like, you're not seeing a trend among companies beating or missing on earnings, or if they miss, it's a very inconsequential, slight 1 or 2% miss, not some like 7 to 9% miss, which is good. Because at least that helps us say the earnings picture is holding up. Now, Q2 is going to be the real test of that because Q2 is the first quarter after dealing with all the tariff volatility. And so we're going to see if that can continue. But it's not like the earnings picture is bad right now. We just need the broader market to shape up with the macro and then obviously with the tariff stuff not being as intense. Anyone here win a gold bar from Hood? Okay, so I didn't win it, but people on Twitter last night were posting pictures of them getting the confirmation emails that won it. So if you did apply to Robinhood's gold bar entry, which all you have to do was like deposit, I think it was like $1 per entry. Yeah, so if you deposited anything, I think I put in like $3,500 a couple weeks ago. So I had like 3,500 entries. But if you did enter, you should be getting an email soon if you won. Some people are getting it. I think there's like 1,000 winners or something. But yeah, I did not end up winning any gold, which is now worth a lot more, given gold is going up a lot more. Did Trump tweet right now? Let me check. He did tweet last night about Russia and Ukraine. Yeah, he tweeted an hour ago. He said, I am not happy with the Russian strikes on Kyiv. Not necessary, very bad timing. Vladimir, stop. 5,000 soldiers a week are dying. Let's get the peace deal done. So we did have some news last night about Russia launching some more strikes on Kyiv, which is like just a horrible thing, obviously, because launching strikes means that people are losing their lives. Also, because there is a chance that we were getting closer to a deal. Now, although Zelensky was not happy with Trump wanting to recognize Crimea as a Russian territory, and that was like a deal breaker for Zelensky in terms of getting a peace deal done. I mean, Putin launching strikes yesterday is not helping the deal either. And so Trump is realizing he has a much harder challenge to deal with right here to be able to try to navigate this. And so I don't think we're any closer to that deal, especially not after those strikes yesterday. Obviously, not the best for stability in the markets, but also just not a good thing for humanity if we can't end that anytime soon. So that's another thing that we're going to have to wait and see in terms of how it plays out over the coming weeks. If today is green, that's super bullish. How many have we had 3 green days in a row in April? You know, that's a good point. Now, April is going to be ending in the next week. I don't think we've had 3 green days in April in a row. Have we had 3 green days in a row in April? I mean, it feels like it's been forever. This is the dude. This feels like a lot. This was the month where we got the Liberation Day announcement on April 2nd, and then we got the worst day since 2008 on April 8th, and then we got the 90-day pause, I think, on April 12th, which recovered not everything we lost, but like we got 10% on the S&P in 2 hours. And then we got the China 145% tariffs, and we lost most of it. I think we lost 7% from it. And then we got the Trump dissent pivot when they said, hey, we're talking to about 30, 40 countries, and the market kind of pivoted 2 Fridays ago. And now we're back here where we take away the China 145% tariffs, kind of, and we are still, tariffing every other country 10% across the world, minimum. So it has been a volatile week left. And then we had Tesla earnings, and we got Google today, and then the rest of them report next week. And that's how we're going to be ending out April. I think it has to be one of the most volatile Aprils of all time. At least that's what it feels like right now. Okay, let's listen to Beth Hammack. She is one of the Fed presidents. She was on CNBC just now, and here's what she had to say about the Fed, tariffs, all that stuff, and then we'll keep going from there.
Talking to companies, talking to businesses, and understanding how they're thinking about things. What we're hearing right now is that the uncertainty is really weighing on businesses, and it's creating issues for them in terms of planning, in terms of thinking about where they're going to go. And so some of them have put pauses on whether they're going to make bigger investments, whether they're going to invest in new facilities, new capital plans. And then they're thinking about their hiring plans. They're thinking about their labor force. And do they have the people they need? How many people are they going to be able to keep on for what length of time, given what these changes might do for their businesses?
What is the macro effect of this? If people hold back now, what does that mean for the economy now, and what does it mean for the economy in the future?
It's a great question. We don't know the answer to that. I wish I had a crystal ball. We don't have one. I think everyone is trying to work through what the implications of these tariffs and these policies are going to be, how significant the tariffs are going to be, how long they're going to stay in place. And if you're looking at building a new facility, building a new plant because you want to bring back production into the US, you need to have confidence that those policies are going to be in place for a long period of time. Can't just be 2 or 4 years. It's got to be 10, 20, 30 years to get that capital investment to make sense.
When you put it all together, there are people, Torsten Slok from Apollo, other JP Morgan as well. They say if these policies stay in place, there are 60, 70, 80, Torsten's even 90% chance of recession. What's your outlook?
I'm not really operating with a base case right now. I think the cone of possibilities is so wide.
When you say base case, that means you have no sort of odds-on bet in what you think.
I'm looking at scenarios.
Right.
I'm trying to break the world into different scenarios of what could happen. If we see businesses really start taking the tariffs and it impacts their input costs and they have to raise prices significantly. If we see pricing going up a lot, but we don't see an impact on growth or labor, then that could be, inflationary. But it could be, like one of my colleagues says, that the tariffs could be just a change in the price level and that it's not going to be persistent. And it could be that we see actual, weakening in the labor force, weakening in growth, and that would require a different set of policies. And it could be that we have the two sides of our mandate in conflict, which is the most challenging for monetary policy. If we see higher inflation and lower employment, that's where things get really complicated.
How long do you think it will take you to kind of suss out which one is the more important? Because my guess would be that you'll have someone in the Oval Office who's watching very closely when you all meet next month to see what happens. Is it crazy to think that it's too soon, or is it crazy to think that a decision could be made by that point, that you will say, okay, we know enough about what's happening here?
So I think it's too soon. I think we need to be patient. I think this is a time when we want to make sure we're moving in the right direction than moving too quickly in the wrong direction. And so I would rather take our time, make sure we're looking at the data. The hard data that we've come into this quarter with are actually really good.
Right.
You've got unemployment right around 4.2%. That's right around full employment. Inflation's continuing to come down right around 2.5% on PCE. So we've seen good things in the hard data. The soft data is more concerning. A lot of the surveys have shown more worrisome, more struggling with, exactly what things are going to mean. We're seeing that in the Beige Book that came out yesterday. You're hearing a lot of focus on tariffs and uncertainty. And so to me, this is a good moment for us to take our time and make sure we're moving in the right direction.
See, this is the problem. Take our time. I mean, if they're going to keep taking their sweet old good time, they might be ignoring a picture that Kris just sent me right here. take a look at this. Look at the months of supply available on the market, in the housing market in particular, starting to increase, which is technically good because that means that we have prices that theoretically can come down on housing because you have more supply that's out there, which is good because theoretically that should help decrease shelter inflation. Like if they're going to ignore this type of stuff, if they're going to ignore the fact that demand's going down, consumer confidence is going down, etc., and they're going to keep taking their time to try to understand everything that's playing out, well, they're probably going to be late to the rate cut. Now, granted, their argument is, hey, we're so afraid of the volatility from the tariffs and the inflation that it can create that we deserve to take our time and wait to cut. I don't agree with that. I understand it. Like, I think they should be cutting, but I get why they're not cutting. And I've been saying this for the past couple of weeks. I think they have no responsibility, or they feel no responsibility, because they're just going to blame Trump if we do get a recession because it's going to be based on the tariffs. But that's the Fed's stance. So for everyone saying like, hey, the Fed's going to keep cutting, they're not going to cut until they're fully sure that tariffs are not going to create more inflation, because they just don't want to restoke it, even if we have all these other parts of inflation that are coming down. And whether you agree with it or not, this is essentially how the Fed thinks. Even if Jay Powell wanted to cut rates, you've got people like Beth Hammack that are probably not going to vote for cutting rates. And he needs a lot of people, the 12 members that vote, a majority of them, to actually vote to go in one direction versus the other. So if all of them still think that the tariffs are going to create too much inflation, we're just not going to get that rate cut anytime soon.
Seen that this is not a Fed that's afraid of moving quickly if we need to move quickly. And so if we have clear and convincing evidence by June, July, September.
But afraid to move preemptively.
Look at that, June, July, September. I mean, you might as well say October, November, December, January 2026. At this point, it doesn't seem like we're getting a cut in May. I think we get it in June, but they are going to take their sweet old time. They do not feel the pressure of needing to cut rates right now.
That's the thing. And I know how hard it is, but saying I want to wait and see. Let's say the tariffs, and we've seen when the stock market acts a certain way, it seems like the tariffs become less certain that they're going to be here for a long time. So on the one hand, you say that you might not get to the second derivative. It might be a one-shot deal. We might not even get the one-shot deal. We might not even get that. But we do seem to have a lot of uncertainty. I think I can already say I think the risk has shifted much more to a growth risk than inflation. We had some really soft inflation numbers already. If you really want to be...
Yeah, the Fed doesn't care. The Fed does not care. Even with those soft inflation numbers, the Fed is afraid of the tariff inflation, which is why I'm sticking to my theory. I think Trump should have waited to start this tariff stuff at the end of the Fed cutting a couple times. So maybe in the fall, he could have still done it. He has unilateral power to be able to increase or decrease through the executive the tariffs. And he could have got a couple cuts before he did it. So I think starting it in February might not have been the best decision, but this is what we're dealing with right now. And ultimately, the Fed is going to figure out when it's time to cut. April 24th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, wake your ass up. Here we go. Thursday, April 24th. Thank you, everybody, for being here. Palantir opens up the day looking more beautiful than ever. 101.37 in the midst of all this volatility, still holding triple digits. I tweeted yesterday that a triple digit Palantir makes me feel all warm and fuzzy inside. It's the feeling you just can't really explain. But there you go. 101 on Palantir. That's up about 0.23% as we get into the market open. Ford is up about 1%. GM is up about 0.5%. NVIDIA, 103.45. That's up about 0.71%. Robinhood, wow, up 2.5%. Look at that. Robinhood getting some really nice momentum out the gate. Maybe that's because it fell a lot yesterday from its highs and it's recovering a little bit of that. I don't think Bitcoin's mooning right now, so I don't think that's a Bitcoin thing. Bitcoin's up a little bit right here, 92.8. But Robinhood getting some momentum. TLT is up about 1%. Yields have started coming down nicely in the pre-markets. There's actually a pretty good 25 basis point decline right there. So that means TLT is going higher, which is not bad. Grab up another 1.94%, 448 now on Grab. SoFi right here, 1185. That's up about 1%. Meta back to 520. That's flat on the day, but a little green. Intuitive Surgical, that's up about 1%. Costco's red. Interesting. Is Walmart red? Walmart is red. Interesting. Is Home Depot red? Home Depot is red. Interesting. So the retailers are going red today. Tech's going green. Lowe's is also red. I wonder what got the retailers to go red. Maybe it's the Procter & Gamble earnings, but That is they've been green for the majority of the week. Robinhood right there above 46. There you go, baby. 3% on the day. Tech is going green. S&P's up 0.24%. Palantir is up another 2%. Even Google, which has earnings today, we'll talk more about Google in a bit. That's up 0.5%. Nvidia right here up 0.8. Where is Tesla? I think Tesla's green. Tesla is green. 253. That's up 0.94%. The Dow Jones is red because of oh yeah, sorry, I meant 2.5 bips, not 25 bips. 25 bips would be a bit aggressive on the 10-year. The Dow Jones is red because of IBM. So IBM, you might be asking why they're down 7% on the day, which I think is kind of aggressive. But then again, I can't blame the market for this. They had a decent earnings, but apparently they said Doge cut 15 of their contracts. Doge cut 15 of their contracts. So boom, Doge cuts 15 deals. I don't know what the total deals were worth, but I would imagine those big government deals, we're talking about at least a couple $100 million, with them at least 50 to 75 million, something that would make a meaningful dent in their revenue guidance, and apparently it did. So IBM right here down 7.5%, was at 260 in February, now at 226, based on Doge taking away some of their revenue. Tesla right here up about 0.5%. Robinhood just falling below 46. So you got a couple red candles right there, but we still are green on the day. S&P 500 up about 0.16%. Palantir 1.32, still holding that $100 range. Nvidia 103. Let's look at the semis. VG Venture Global, that's up a little bit. Next Decade's up. Uber is up 1.5%. The semis are all green across the board. SMCI, Intel, Broadcom. Intel has earnings today. That's up 2%. ARM's up 2%. TSM's up 0.5%. Intel's already firing 20% of their employees. So that news is baked in. If there's any level of positive news on the earnings, maybe that can be a catalyst for Intel. AMD's up 0.11%, and then Nvidia right here up about 0.5%. Didn't IBM miss on the top and bottom? Yeah, but it was very little. I mean, I think they missed by like 1% or like 0.5%. So the misses were pretty inconsequential from what I remember. But because IBM was up 5%, and it was up 5% for a good 40 minutes. And then I think the street found out that the Doge stuff was canceled, and then it just tanked after hours. So that one took a little bit of a hit. In terms of the companies that had earnings yesterday, let me pull these up right here. So we had Texas Instruments. They're up 4.7%. They had a decent earnings. Las Vegas Sands up 2%. Good earnings. Lam Research, good earnings. They're up 3%. ServiceNow, 12%. They deserve it. Their AI revenues is growing 400% year over year. They have a backlog of $6 billion. I mean, top line's growing 20%, which isn't like super, super, super high growth, but at their scale, it's very decent growth. And AI revenues are continuing to grow. Now, why are their AI revenues growing? Bill McDermott said basically companies keep reaching out to us because they want to increase their margins. And in the period of volatility that we're in, if your top line takes a hit, like top line revenue growth for Procter & Gamble, for et cetera, but they can use ServiceNow to increase their margins on the bottom line, then they can still deliver more value to shareholders. So he kept stressing that companies believe AI is a margin enhancement. And that is why ServiceNow is getting this momentum, which to me is really bullish for Palantir, because ServiceNow sets the stage every quarter for what the outlook is like in terms of companies willing to spend on SaaS. Palantir right back at 103 right here, up 2.5%. And we already know all the momentum Palantir has seen from a variety of deals they've got in. For those that are just joining, the Palantir deal that I was referencing in the title is Palantir and Google. Palantir and Google. So Palantir and Google are working together now. Google is allowing Palantir's FedStar program to be operating on GCP, which is the Google Cloud, inside of the government. So you've got a deeper integration of Palantir with Google, another hyperscaler. They're already working with Amazon and Microsoft in the cloud in the federal government. And to me, the takeaway there is it just increases the trust and safety and overall reliance that government clients can have on a system like Palantir. And it increases the scope of different clients that can work with them, because if you're already building on GCP, now you can integrate seamlessly with Palantir. So if we're having more software spend and we've got more deals, and Bill McDermott's having AI revenue go up 4x year over year, I wonder what that means for Palantir. So I think that is a decent comp to take a look at what's going to happen on their earnings. Robinhood right here up about 2.3%. Grab getting some real momentum. Again, they appointed someone yesterday to their board of directors who specializes in investment banking M&A. I think they either are getting ready to buy a company. They already bought a company a couple weeks ago. Maybe they're restructuring that company, but that appointment to their board is very bullish. And it seems like they are going to be on the pursuit to continuously expand their momentum in Southeast Asia. Grab right here up 3% on the day. Also, one quick note about Grab. Do you guys know the brand Food Panda in Thailand? It was one of the first food delivery brands. Yesterday, they said sayonara. They're out. They can't compete. They haven't made a profit in 13 years, and they're leaving. I mean, it's one of those things where even if you are one of the main brands in a region. It is so hyper competitive that they just can't take market share and generate a profit. And so they're leaving the region. Grab is 46% of the market share in Thailand when it comes to food deliveries. So even if Grab's not making a profit yet, the whole reason I'm excited about them is because I think they are becoming a behemoth in Southeast Asia, and they're finding ways to survive in very competitive markets. The profits eventually will come, even though Grab is net income positive. It's just not a lot of net income. And eventually when it comes, I think the street will follow, and obviously the share price should be hopefully following as well. Tesla right here, still up 1%. All the retailers go red. So the retailers are still red. Robinhood right back to 46. S&P back to 536. ServiceNow up 12.4%. JetBlue is down. Delta's down. United Airlines is down. A lot of them probably down on American Airlines and Southwest's earnings, which weren't the best yesterday. Southwest right here is actually up. Wow. Weird. Southwest was down 4% yesterday. Now it's up 1.4%. The other airlines I read. That's a bit of a turnaround there. Where's Chipotle? Chipotle got hit yesterday. They lowered their guidance badly. That's up 2% as well. That was down 5% yesterday. All right, so we're getting some market recoveries here, which is not bad. Rocket Lab is $21, up 4%. Rocket Lab won another contract yesterday with Kratos Defense. So they won a contract on Monday. They won another contract yesterday. $21. This thing was 15 a couple weeks ago, so it's seen a decent chunk of momentum, up 4% right here. And maybe this can help sustain Rocket Lab continuing to be in the $20 range. Have you seen Josh Brown talk about Hood? It was his pitch on the compound. Yeah, he's talked about Hood for a while. His wealth management firm owns Hood, even though he doesn't own it directly. They disclosed back in Q4 of last year that they own Robinhood. His thesis is pretty simple. He just thinks more people are going to keep using the product. And as more and more people care about finances, investing, if Robinhood keeps innovating, I mean, literally you can bet on every playoff game in Robinhood. I mean, there's just so many ways that I think they're going to continue to gain momentum. And so I think it makes sense. And from his perspective, he wants to invest in the future, and Robinhood seems to be the obvious future right here. Let me check the resistance on 104 for Palantir, because we got really close. 103.88. Right now, 104 is 43,000 shares away. It's not crazy. That's not crazy. I think there's a world in which we could get there. It's about 15 cents away right here. Dude, you got to give some credit to Palantir. In the midst of this volatility, holding up and having the ability to go a little higher. Here you go, 5 cents away. Let's see if we can crack it. Let's see. Last time we saw 104 was, I believe, in February 20th. I think we could crack it, dude. We're really close. We are close. Where's Hood? Hood's at 46.20. Let's see if we can go for 47. We touched 47 yesterday on Hood. Chipotle up 3.7%. That goes green. Grab right here up 4.3%. Wow. Grab really getting a nice candle on this day. Tesla going up 1.3%, 253. Jeremy sold all his Tesla. I know he's made a lot of headlines. I talked about that yesterday after hours. Can't say I hate his argument, but obviously he is, making his decision. I wouldn't have done it with a $13 average. I just don't know where else I would have put that capital. I would have let the story play out, but he is not wanting to be part of the story anymore. 104, baby. There you go. 104 on Palantir. There she is. I think we had 104.07. We broke through those 43,000 shares. I think if we could break through 43,000 shares, then we have a shot to maintain that. 104.9. Now she's running a little bit. 104.17. There she goes. She's off. She's off to the races. Hopefully we can hold it. Even if we hold triple digits today, I will be happy. But 104 getting a little bit more momentum as we see Palantir continue to inch higher. Again, it's this warm and fuzzy feeling seeing it at triple digits. It's not really explainable. It's like, it's just, there it is. Seeing what I think we should replace the Mona Lisa and put up Palantir at 100. I think that, I think people across the world would come to just look at that screenshot. Granted, I said the same thing when Palantir got to 20. I remember I put out a tweet when Palantir was at 20. I was at the gym. It finally happened. It was like July 2023. And I tweeted it, and I was like, this is prettier than the Mona Lisa. But $100 also is pretty damn beautiful. Tesla right here, 253. Robinhood, 46.35. Let me check the resistance for 47 on Hoodie. And let's see if we can hold this. I don't know why tech is going so green and everything else is going red. So we are seeing a bit of a divergence here. Even SMCI, that's up 3.5%. The Qs are almost up 1%. Vertiv's up 4%. Reddit's up 2%. This is really a tech rally we're seeing today. Everything else kind of is just being stagnant. What about SoFi? SoFi Rocket Lab is up 5% now. SoFi up 2%, back to 12. SoFi has earnings next week as well, which is going to be very, very important. Green markets are so much fun. Yes, green markets are. Dude, we got to enjoy these days because they've been rare in April. So even if they're going to leave, we have to enjoy in the moment seeing some of this green. Quantum is green right now. D-Wave is getting some love. It was up about 4% yesterday, up another 5% right here, 749 on D-Wave. So Quantum getting some momentum. What about GameStop? GameStop is up about 1%. Palantir 104.38. She's not stopping. And if Palantir is going like this, then I think we might see some of the other tech sectors lead. The reason for this could be because of ServiceNow, to be honest. Let me check the rest of the SaaS names. ServiceNow kind of set the standard for SaaS earnings. Yeah, look at that. We're green across the board. CrowdStrike's up 3%. ServiceNow 13%. My goodness. Mongo's up 2%. Adobe's up 1%. Oracle's up 2%. Snowflake up 3%. Datadog up 2%. Twilio's up 5%. They didn't even have earnings. GitLab's up 4%. They didn't even have earnings either. And then Palantir up 3%. This is an entire SaaS sector rally, I think, based on ServiceNow. ServiceNow is a big company, dude. It doesn't get the crazy, like, extreme hype and multiple and retail following, but it is a very big company. They're still down about 10% year to date, so they're still red for the year. But this is a very big company, and a lot of enterprises across the world procure their software. $191 billion market cap, 925 on ServiceNow. Do you trust the green? Okay, let's do the poll. Let's do a poll. Do you trust this green? This is a continuation of yesterday and of the day before, so this is not like a regular trust the green. This is 3 days of a little bit of data, even though today's not over yet, but we do have some more data. Do you trust the green? The poll is in the chat. 47 for Hood. Resistance is 13,000 shares. 13,984 shares. I think we got a shot to break it. We are very close. 13 cents away. Palantir 104.47. I mean, who knows, bro? Maybe she wants to go for 105. Robinhood 5 cents away. Let's see. She's getting rejected at 46.93. Let's see if she can get over the hump right here for 47. Trump hasn't tweeted yet, so I will alert everyone if we see any tweets by him. He could ruin all this or maybe enhance it, but we're going to see. Cybersecurity ETF, that's up about 1.6%. Palo Alto is up 2.9%. And then CrowdStrike is up nicely on the day as well. So cybersecurity in that SaaS sector getting a nice little boost today, which is not bad. Why is this happening, though? Why do you guys think SaaS, cybersecurity, and tech is running? Even big tech like the Mag 7s, they're all running as well. All of them outside of Apple, and Apple's flat. Everything else is green. Google's green, Meta's green, Microsoft's green, Amazon, Nvidia, Tesla. Nvidia now up 1.2%. This is kind of interesting because you got like you're sort of safe. Like I think Verizon should be red if we're seeing gold is green. We have Verizon slightly green. So you're getting a little bit more of an everything rally here outside of the retailers. IBM's getting hit nasty 8%. The airliners are going red as well outside of Southwest. Webull is red 2%. Hims is up 3%. SMCI up 4%. Salesforce up 4%. Again, they didn't even report earnings. This is an earnings type of a move. And they're kind of piggybacking off what seems like ServiceNow. Robinhood, 5 cents away. Come on, let's get it. Let's get it. Let's get 47. We are so close. About 10,000 shares away. Oh, now it's 20,000. Okay, now that wall is getting bigger. About 20,000. Let's see if we can get there. Less affected by tariffs, yeah, but you know the market didn't care about that a week ago. So I don't know. Maybe there's something else that's fundamental, or maybe the market's waking up and saying, "Hey, the tariffs are going to affect Walmart more than Palantir," or it might be some more macro data that's helping SaaS in particular and growth stocks continue to get momentum while safety trades go down. SoFi's up 2.6. Rocket Lab 7% on the day, dude. Pretty incredible for Rocket Lab. 21.70, trying to make its way back to 22. Robinhood 5 cents away. Let's see if she can do it. Let's see if she can do it. 46.98. Let's see. Trump is scheduled, I believe, at 12 p.m. to talk. So we might get some statements from him later today as well. Don't question it, just enjoy it. That's good advice. That's good advice. Don't question at this point. Just enjoy. Tesla 253. Where is Palantir? Wow, 104.70. Let me check 105 resistance, dude. Are we going for 105? Also, who's selling into this? Let me know in the chat if you are taking advantage of this and taking some profits. I had a couple people reach out yesterday saying they sold some of their Palantir, which is fair. Look, it's trading at a high multiple, and if you bought it early, at the end of the day, if you want to take profits, then you take your profits. 105 is 140,000 shares away. Okay, so that's a bit more aggressive of a wall, but it's doable. It's just a bit more aggressive. Okay, no one's selling, dude. Dude, we are freaking retail bulls that are holding, or just, it's worked so far, even if people are still down year to date, but getting a little bit of recovery. CrowdStrike right here, 400.74. Look at Crowd, back to the 400s, dude. This thing fell below 200 back in July when they had their critical error. Back to 400 on CrowdStrike. Robinhood cannot get above 47. We got to 46.98. Cannot crack that yet. We'll see if we can in a bit. Rocket Lab still up 5%. Grab, really nice momentum today on Grab, up 4%. Grab is basically at my average. My average is basically around this 445, 450 range. So we are getting back to that level on Grab. Palantir right here, 104.90. Oh boy. Oh, there you go. There you go. 105. Wow, that happened right when I clicked. Oh, we hit 105.19. That means we went down, then went right back up. 105 on Pound. That's 140,000 shares were purchased at the 105 level, which equivocates to $14.7 million of buying pressure at that 105 level. IBM still down 8%. Some people were saying IBM's Doge contracts went to Palantir. Palantir might be taking some of the gains from IBM today, along with the Doge contracts right here. But 105, we got rejected at 105.19. Now it's right below that, 104.50. But we did break 140,000 shares to get some of that momentum. It's not bad, dude. Not bad. This is nice to see. 50% of you say, yes, you trust the green. All right, so it's 50-50. Everyone's 50-50. Yeah, Sam Altman stepped down for Oklo. There was I forgot what investment firm came out. Oklo right here up 5%. And they said this is bullish that Sam Altman stepped down because now OpenAI doesn't have a conflict of interest if they wanted to buy Oklo's energy services. And I thought that was such a weird spin because I was like, even if Sam Altman was the head of Oklo and OpenAI needed energy, like I don't think there's some massive conflict of interest if they're giving services to Oklo. I mean, I guess there is technically, like, especially because Oklo is a public company or whatever, but I didn't think it was some egregious conflict of interest that Sam Altman couldn't be the head of OpenAI and Oklo. But apparently the Wall Street firms that cover it, they're saying that's actually bullish. Now, maybe that's a crazy spin on the entire thesis, or they're legitimately saying, hey, this is actually good for a lack of conflict of interest. But Oklo right here up about 5%. It was at $60 back in February. So this one really caught some momentum. Still down a lot from that, but up 5% of the day. Grab right here up 3.4, and then Palantir 104.60 currently right now. VIX is down 9.2% in the last couple of days. Yes, let me check the VIX right now. VIX is currently down 2%, 27.81. The 10-year is coming down kind of nicely, 4.332. This thing was at 4.4 yesterday, basically. So that one's coming down a little bit as well. Sam Altman stepped down. Yes, Sam Altman did step down like 2 days ago. Oklo was down like 15% after hours. What is the VIX? The VIX, again, the volatility index right here, 27.81. This is a way to measure overall volatility in the broader markets. The more the VIX goes up, you tend to see equities go down on that volatility. Basant did say that the VIX peaked at 50 last week when he did that interview with Bloomberg, which, I mean, we would have. That's another thing Steve was talking about the other day. It's like, we're probably done with the worst of it, right? I mean, that's a good question. Let me ask this right here. That's a good question. Are we done with the worst of it? If you think we're done with the worst of it, then any dip you buy, because it's not going to get as bad as it was on April 8th. If you think more, we're not done with the absolute worst of it, then that means Rocket Lab's going back to 15, Palantir is going back to 60, Grab's going back to $3, Palo Alto's going to $2.75. I mean, like, we're just really going to see SoFi is going back to $8. Like, if we're not done with the worst of it being everything we've experienced, then maybe it's okay to be more aggressive on buying these dips. But if a lot more pain is to come, which again, could it? Sure, if we get a recession, obviously, but I just think Trump has shown his cards multiple times at this point. That's why the market didn't tank yesterday when he kind of walked back the China tariffs, because the market knows he can't. Like, we're going to have to walk back the China tariffs, even if he is not going to get rid of it anytime soon, which means inevitably we'll get a deal, even if it's not the best deal, and we'll be able to move on from this. But I guess it's just a question of what you believe in. Wow, 51% of you say yes. So still 49% of you think the worst of it is still to come. I mean, if the Fed doesn't cut in June, then yes. And the way that lady was talking, the Fed president, it seems like she's not really excited to cut anytime soon. I definitely don't think we're going to get the cut in May. I'm not expecting a May cut, but if we don't get a June cut, which, by the way, remember in 2023, we thought we would get the June cut and the July cut. And guess what happened? We did not get the cut. We got a pause. The first time we got the cut was September 2024. We had to wait over a year to finally get the cut. So there is a world where the Fed maybe just pauses and they do nothing again, and they keep us waiting until closer to the end of this year, even though I do think June would be the opportune time to finally get a cut. And hopefully the Fed follows through. Tesla right here, 252.58. You got Tesla still up on the year, still up on the day, even after the earnings that we had. Has Buffett bought? We are not going to know what Buffett did until for, I think, another 3 weeks. And then we will get the 13Fs, 13Gs. I am very curious to see if Buffett bought anything. I saw a chart yesterday. I don't know if I saved it, but Buffett has, I believe, 4.7% of all the treasuries that are in existence for the United States. It's some ridiculous number, dude. It's some, I think, like 400 billion of treasuries at this point. Yeah, here it is. Warren Buffett owns 4.6% of the entire U.S. Treasury market. I mean, come on, bro. That is wild. That is absolutely wild. So he owns a crap ton of treasuries, and he's chilling on that 4.5% return that he's getting to basically do nothing. But I'm curious, is it finally time for him to say, I need to deploy some capital? It would be nice to see if he's actually starting to buy something. Where's PayPal? We haven't looked at PayPal in a bit. PayPal, 63. Dude, what are some stocks we haven't looked at? Put in the chat. What are some stocks that we've just forgotten about, and you're genuinely curious what stock price they're at? Like Disney. We haven't looked at Disney in what feels like months. Disney, 88.62, up 1.5%. Disney year to date is freaking down 20%. So Disney really not moving any crazy. Elf, I think we looked at Elf on Monday. Elf right here, that's up a little bit, still down year to date. Palantir, yeah, we haven't looked at Palantir. I just somehow forgot about that one. Grinder, hold on, where's Grinder? 21, baby, 2096. I'm just saying, maybe your boy wasn't crazy when he was saying they have a monopoly on gay dating at $14. I'm just saying. Archer, where's Archer? Archer, wow, that's up 5%. Archer had their New York event for the midnight airplane or jet or whatever, eVTOL. And they had Jimmy Fallon show up at that event. So that event got them some media. That one right here, up 5%. Oh, Ginkgo Bioworks DNA. Dude, this one up about 4% today. Wow, this one has had multiple reverse splits. So this one is still down a lot from the top. But this one's up 4% of the day, which is not horrible. Nike, are we green on Nike? We are green. Everyone's saying that Vietnam deal was coming because Nike was green every day or on Monday when everything was red. We haven't got any word of a Vietnam deal. In fact, Basant said yesterday that India is most likely the first deal they're going to get done. So maybe Vietnam happens, but India seems to be the one that's most likely to happen soon. Affirm is up 1.6%. Affirm got hit with a bad earnings last quarter, but Affirm right here, 47.54. They also lost Walmart as their biggest client for buy now, pay later to Klarna, which is not gone public anytime soon. But Affirm right here is up. Whereas Starbucks, we haven't looked at that one. Starbucks, 83. Wow, Starbucks was at 100 last time I saw it. Starbucks should be down year to date. Starbucks is down 10% year to date. This thing was at $100 in all through January and February. So that one got hit really bad when everything else took a nice little drop as well. MasterCard, MasterCard and Visa, those have continued to do well. I think they have earnings coming up soon. MasterCard right here, 528. That's down a little bit on the day. I believe still down year to date, but it's not like their actual earnings have suffered that much from what we saw in Q4. Robinhood right here, 4670. That's still up 5%. Spotify has earnings coming up. This one got upgraded by pretty much every firm based on the thesis that Spotify is going to do what Netflix did, which is be a recession-resistant stock. Can't say it's not going to be. I just don't think that many people would cancel their Netflix or their Spotify subscription. So, I mean, I think that thesis could make sense. 597, that's up about 1%. On the day, we looked at Mongo and Oracle today. They are green along with everything else based on ServiceNow. Tempest AI, this one, Nancy Pelosi still owns a lot of. Oh, by the way, Kathy bought NVIDIA and AMD yesterday. So she bought some more of the semis yesterday. Tempest right here, 50.71. That's up 2.3%. That is now number 10 in the ARK Innovation Fund. So that is a pretty big holding for Kathy, and Nancy has a ton of that as well. Robinhood right here, 46.75. CrowdStrike 403. That's not stopping, dude. That one's up 5%. This is a really nice tech SaaS rally that we're seeing today, and a semiconductor rally across the entire market. And look at NVIDIA, 2%. What makes this really bullish is that this is the third day of the green that we've seen. Monday was red, and then Tuesday, Wednesday, and so forth. Thursday are green. We got a lot more in the day to go, but still, it's nice to see 3 in a row of getting that green. I have 60 shares left to finish my NVIDIA position. So at some point, I think I'm just going to pull the trigger and get it over with. And then we will officially have 1,000 shares. And we're going to ride it off into the sunset. Even though I feel like if it dips on earnings on May 9th or May 20th, whatever, I think I'm not opposed to adding more shares after 1,000 shares. Like, I mean, if it really has a gangbusters quarter and they actually dip like they've have for the past couple quarters, I mean, all right, if they really want to take it back down again. Again, Steve and I did a podcast, I think 2 nights ago, talking about NVIDIA, and like we ran through the numbers again. Like, I think Steve and I have run through the numbers at least 25 times, privately and on YouTube Live this year, to try to figure out like, even Steve texted me that he's like, are we stupid? Or is the market just like not getting it? And I was like, let's run through the numbers again, bro. Because maybe we're stupid, or maybe this really is the market just like refusing to want to care about the story. 105 on NVIDIA. There you go, up 2.3%. And the more we run the numbers, the more we think it's not us. It's the market. And in the market, it's okay for the market to not appreciate it right now. But as long as we're not totally wrong on the thesis, eventually the market will come around. And NVIDIA should get back to these levels. Wow, Hoodie, 47. There you go. 47 on Hoodie. Broke through those 20,000 shares. Cost basis on NVIDIA is like 118. 118 right now. 47.20 on Robinhood, 5.7%. That's a nice break. That's a violent breakthrough. It just busted through that $47 level. Let's see if we can hold that. Palantir as well, trying to make a run back at 105. 104.92. Looks like we were losing a little bit of steam, and now we're getting it back around this 10 a.m. time. We have to see if we can get through 10:30, which is when we get a 10:30 slam. But all of those holding up right now. May 26th is NVIDIA. Okay, cool. May 26th. May 26th. May 26th, we'll see. Where's SoFi? SoFi is also at $12. That's up 2.5%. There's been a lot of Spotify, by the way, back at 600. There's been a lot of leaks, by the way, on SoFi's like code on Twitter. A bunch of people have been going through like the different APIs they're putting out, and it seems like level 1 option trading is coming pretty soon. It seems like that's the case. So for those that have been waiting to trade covered calls and puts on SoFi, it looks like based on the leaks we've seen that should be coming soon. Robinhood right here, 47.20, up 5.6%. The technicals on Hood are not looking bad, and the technicals on Grab are really not looking bad. So next week, we got Hood and Grab earnings. If they can put up some good numbers, increase guidance, Hood just has to say April was a good month and that the rest of this quarter will be good. That's all they have to say. And I think we get back to the $50 level. I don't think we get back to 65, but we can maintain 50. And then Grab just has to increase EBITDA guidance to like 500 million. They're at 450 right now, 470. If they can get to 500, I think the street would really be happy. If they can get above 500, I think the street's going to be very happy. And that's it. If both of those companies put out those reports, we're going to have a good week next week. And then SoFi just has to... Okay, my thoughts on SoFi is they have to double down on the loan platform. If the loan platform is the thesis now, then Anthony Noto needs to spend a lot of time on that call saying, hey, he just needs to acknowledge the elephant in the room. He needs to say, hey, look, a lot of people thought SoFi was going to be the AWS of fintech. I know that Galileo hasn't grown to people's expectations. He should just say it. Like, just be honest. Be like, look, I know we're not growing that much in the tech side of the business. However, we have found other parts of the business due to the diversity and the what's the word? The veracity of our ability to pivot and find different sectors that we can capitalize on. And we truly believe the loan platform is going to be the future of the business. If he says that and says it in a way that's like understandable to the average investor, and that and then Wall Street can get on board with, I mean, who cares about the tech platform? Like if you got a loan platform that's growing aggressively, then just double down on that. That's what Palantir did with AIP. I mean, like no one even knew what AIP was, and AIP was barely developed, and Karp gets on that first earnings call, and he's like, AIP, it's the future. AI, we got an AI platform. It's called AIP. It's going to change everything. We're doing these boot camps, boom, boom, boom. Like we didn't even have results for it yet, and Karp was selling the message because that's what a good communicator knows how to do. I think that's what SoFi's got to do on the loan platform. And if they do good, I think we can get some momentum. We got some March inventory for homes data. 1.3 million units, 4 months worth of data. Average home price is $403,000 for the existing homes. That's up 2.7% from March 2024. Okay, cool. Not bad. We did get a massive housing beat yesterday. 720,000 homes were sold versus 650,000 expected, even with 7% mortgages. So put in the chat if you recently bought a home, or if you've like if you're in the process of buying it. Like the fact that people still have money on the sidelines and they're willing to buy at over 6.5% mortgages, probably with the idea that they're going to refi, which is also going to be good for SoFi if we get rates to come down. I mean, it's pretty incredible. There's either a lot of capital gains on the sidelines, people sold a bunch of stocks and they have a ton of money and they want to buy a home, but the fact that we beat by over 50,000 homes, which was the best beat in the past 10 months in yesterday's data, was pretty damn incredible. We'll talk about Google in a second. I have some thoughts on Google, so we'll talk more about them. They have earnings today. There's a bear case and a bull case to what I think Google can produce today, so we'll talk about them in a bit. And we'll see what we get on Google earnings. ASML right here is up about 2.65% on the day, along with NVIDIA and SMCI getting some momentum. SMCI up now 5% on the day. Wow, I got a bunch of you in the chat saying you're buying a home. Jake says he just bought one. Young says he just bought one. Nightman said he did 7% rates. Yeah, and I think a lot of people are planning to just refinance anyway, even with the rates being high. So it's one of those things where people are willing to still pull the trigger regardless. SoFi right here, 12.10. That's up about 3%. ASML up 2.9. SMCI really getting some momentum. IONQ, look at that. Quantum 9% up on the day, almost $30. QBTS D-Wave up 5% as well. So you're getting some of the speculative names to get some momentum around the quantum space. Affirm's up 3%. Starbucks up a little bit. Disney's up a little bit, 2%. Robin, it's still holding 47 like a champ and not giving it up. Still holding it up at 47. Again, sales of existing homes fell 6% in March. This was the biggest decline since 2022. And it was a lackluster start to the crucial spring selling season. That's the headline we got just now. But that is existing homes. That is not the overall home inventory. Yesterday, you did have a decent beat. But in general, we are seeing home sales decline by about 6%. Yeah, anyone who's heavy in SOXL is getting some well-needed relief today. And getting some love as well. 47.19 right here on HUD. Where's Palantir? Are we still holding 104? We are still holding 104. 104.76. Maybe making another run to try to get to 105. Open Door's on the verge of delisting. Dude, Open Door. This thing, I really thought there was a shot. This thing had some potential back in December. Me, Steve, and Chris, we got on a call and we really looked at the numbers. And the one thing Chris showed me that was like, oh, there's no way you could invest in this is the margins. Margins are so, and it's not even just margins now. In 2021, they sold like $20 billion worth of homes. They had a less than 2% margin. Like they don't make any money off their, that's why Zillow got rid of the iBuying program. It's really hard to flip houses profitably. And that's what Open Door's business model is. So this thing was about $2, $2.50 back in December. Now it's at 82 cents. The only catalyst for them is rate cuts, but we're not getting those anytime soon. And even if we do get them, Open Door is not really going to have the margins to sustain it. Are we back to 105? Are we back to, wow, look at NVIDIA and Palantir. 105 together. Look at that. 105.14. Palantir not letting go of the strength today. And NVIDIA right here, 104.96. We got some Fed speak. Let's see what the Fed is saying. I think Christopher Waller, is he live right now? Let's see. We got some quotes from him. He's actually one of the more bullish or dovish Fed people. Okay, he's not live yet, but let me see the quotes. Wow, a person has just been shot dead by cops at Canada's largest airport in Toronto. Huh. A person was just shot dead at Canada's largest airport in Toronto. Wow, that is okay. It looks like there's something going on in that airport. Okay, the Fed said, Fed's Waller said, it wouldn't surprise me to see more layoffs, higher unemployment. No, that's not bullish. And he says, not likely by July will there be clear tariff impacts. I would expect the market to actually not be happy with those comments. If he's saying that we don't know by July, that means, are they going to wait till July to give a cut, or are they going to wait till September to see what happens in July and August to give a cut? And then he says, it wouldn't surprise me to see more layoffs and higher unemployment. Look, if the Fed says, hey, we're going to have higher unemployment, then maybe the Fed should also say, hey, maybe we need to cut. You know, it's so hilarious when the Fed's like, hey, we're probably going to get higher unemployment. And then the one tool to like stop that is monetary policy, which doesn't even take effect until 12 to 18 months. And if we still don't cut and the Fed presidents know that we're going to get a worse economy, it's just one of those things where we're going to have to deal with how that plays out. Now, granted, again, I'm sympathetic towards the Fed saying, hey, we need to see what inflation the tariffs are going to create. But look, if you're the Fed, you just saw the guy take back the 145% tariffs. You literally just saw him 2 days ago saying, oh, we're not going to have those tariffs. At some level, as a Fed president, Palantir, by the way, 104.50, we might be going for 106. At some level, I think if you're a Fed president, you need to be like, you know what? Trump's just going to say anything he wants to say. Maybe we shouldn't believe that we're actually going to have these amount of tariffs. And maybe we should do 25 bips, and we can always pause after, but maybe we should just give a little bit of a cut on the off chance that maybe all the tariffs are going to be walked back. There's not going to be any tariff inflation, and we're going to stop massive unemployment from taking place, given that the CPI and PPI data is the best we've seen in 3 years. Right? Like I don't think that's crazy for the Fed thing, but I also am sympathetic to the fact that they need to take Trump at his word. And if he's going to have these massive tariffs and not take them down anytime soon, even if his rhetoric implies that he will, that they're not going to be able to cut. So it's going to be a game of will they cut or will they not cut that we're going to have to see over the next couple months. NVIDIA right here, 104.96, and then Palantir 105.30, still holding up 4.45%. Currently right now, Target's up 3%. Okay, Target is up 3%. Is Walmart still red? Walmart's still red. That's weird. All the retailers are red except Target. Target holding on to some momentum. Nico says the tariffs are the reason for unemployment. Yeah, that's fair. But then that would mean that you cut, right? Like that's the argument that I'm also sympathetic to, because everyone's saying, hey, if tariffs are going to be inflationary, then that means it's going to increase the prices of goods and services, which means people won't be shopping as much and businesses will be doing layoffs, which means technically there's going to be some deflationary effects because of tariffs if it slows down the economy, which means what do you do in that instance? You cut rates to combat that. The problem is trying to find the fine line between cutting, not cutting. Is inflation going up and down? How much is demand going down in comparison to how much is inflation going up? It's not an easy thing to be able to do if you're the Fed. But it is one of those things where I definitely don't think it's black or white. And Jay Powell's pretty much said it's black or white, and he's just not going to cut until he gets more data, which who knows when or if we're going to get any of that meaningful data. Robinhood right here, 47.60. Let me check resistance for 48 on Hood. Snowflake's up 5%. Yeah, all the SaaS names are running. 48 on Hood is 23,708 shares. 23,000 shares. Robinhood's still up 6% on the day. If we can crack 48, that would be incredible. And then Palantir, 104.83. It's hit 105 multiple times, 105.49 right now at 104.87. Dude, everyone who's working from home is definitely not working from home right now. The past couple of days you were working from home and staring at you lose money. This is one of those days where you're working from home and you're like, well, it's nice to see that something is finally paying the bills right here. and going a little bit more green. Even Google 159, that's up 1.3, Palantir 104, SoFi 1217, Nvidia getting rejected just like Palantir at 105, both of them. But still holding on in those high 104s. Yeah, look at you. All of you guys admitting to not working, bro. Like, all of you just freaking watching these stocks go higher. Gillett says, I'm working from home and I'm so distracted. Dude, I've got a lot of stuff to do after this market open. I have not even packed a single sock for Toronto. I need to like pack stuff. I need to get my passport. I need to check in. I need to do so many things. I've like left everything to the last minute. Also, why does Netflix have to release their new shows on California time? Like, I thought last night at 12 a.m. I was going to get to watch a new season of You, which is my favorite show on Netflix. Is one of the main reasons I care about Netflix. And then I find out it actually comes out at 3 a.m. Eastern, 12 a.m. Pacific. Why do they do this every time, dude? Like, why can't they just, like, I was not going to stay up till 3 a.m. to watch the show, bro. That was so, I got to find a way to watch that show now as well. You know, I found out Steve's a fan of the show. Steve told me he's waiting for You season 5. I was like, what? I couldn't believe it last night. I was like, you know You? He was like, of course I know You. It's a great show. I was like, I didn't think this would be your type of show, dude. But he loves it. He's a fan of it. So he said that's one of the main reasons he has a Netflix subscription as well. So that one definitely is one that I'll be tuning into. Palantir right here, 104.83, Nvidia 104.64, Google 159, Spotify just under 600, and then Hoodie trying to crack 48, but we're at 47.23 right now. What's it called? It's called You, Y-O-U. It's about a guy who's in love with a girl, but like he does some, I don't want to give away too much. I mean, it's a guy who it's like the millennial it's like the millennial version of Dexter is what Steve described it as yesterday, which I think is fair, but it's even better than Dexter in my opinion, because it's like, I don't know. I think the story writing, like the writers on the show really know how to get good commentary out of their actors. And then Penn Badgley is just, I think he's one of the best actors ever. So it's a good show. I think it's a really interesting plot, and it has a really big cult following as well. Okay, let's see. What else do we have going on right now? Chris says, look at CNBC. What are they talking about on CNBC? Hold on, let me see. Let me refresh. We had Fed Waller speak. Chris, I don't see them talking about anything on CNBC if there's anything specific. Oh, he sent me. Oh, the home sale. Yeah, we covered the home sales, Chris. We covered that. It's down 5.9%, which again, another argument for why inflation should be coming down. Yeah, 5.9% worse than a couple of years. Or sorry, worse since the past 15 years on this. Yeah, worse since 2009. Check CEP. Okay, so I found out about CEP. I found out about CEP yesterday. So a lot of you guys were asking about it. It's up 70% right now. I don't even think I can really explain it, so I'd rather just share the video in terms of this. This is a crypto play. This is a freaking crypto play. I thought it was something else. Cantor Equity Partners, it's up 150% over the past couple of days. I'd rather just play the video and explain what's happening here. Some of you guys are going to cringe at this, but I also think some of you guys are going to get a lot of humor out of this. And then for the OG Bitcoin people, some of you guys might get some love out of this. Let's just say someone was inspired by Michael Saylor, really inspired. And as a result, they started something new. And the public version of what they started is called CEP. And it's up a lot. So this is 5 minutes. Let's take a look at this. It was an interesting interview. Again, it's kind of funny. It's kind of cringy, but this is why CEP is up 70% right now.
Founding story. So I co-founded the business with Tether. I would say I've known the Tether Group for over a decade. There just weren't that many Bitcoiners around over 10 years ago. So we've done a lot of work together in El Salvador, et cetera. We've been so inspired by Michael Saylor and all of the public companies acquiring Bitcoin. But I would say over the last few years, that inspiration turned into what we thought was an opportunity and a hole in the market that we could deliver on, which is bringing blue chip credibility and startup upside. We feel like we can bring enough capital and be big enough to win. We're small enough to grow. And most importantly, a pure Bitcoin business. A lot of these companies, they're pivoting from a past operating business. They're rebranding, changing their name. They're maybe selling video games to buy Bitcoin or selling medical equipment to buy Bitcoin.
Right.
And we're a purpose-built Bitcoin company. We're going to build Bitcoin products, Bitcoin cash flow, and we're going to give Bitcoin per share growth to shareholders and be hopefully the best way for investors to get Bitcoin exposure in the public markets.
Jack, I think off camera, just before we started, you used the word vehicle, a vehicle for Bitcoin. I think like a reasonable question that people have is, what does the CEO of a new company whose mission is to accumulate Bitcoin do day to day? Like, what is it that you're going to try and manage or achieve?
Yeah, so for all the Bitcoiners out there, we encourage you to check out our filing. We've introduced 2 new metrics to the public markets. One is BPS, stands for Bitcoin per share, as opposed to earnings per share.
So they are not going to be filing their public SEC documents in earnings per shares. They will be doing Bitcoin per share. They are trying to take the MicroStrategy thesis and really take it to the next level. The whole point of the company is to just buy more Bitcoin and then do stuff with it.
And the other is BRR, which stands for Bitcoin return rate. And my job and what I'm dedicated to do for our shareholders, in which we view similar to our customers, is grow our Bitcoin per share. So we're an operating company. And when you buy a share of 21, in a hypothetical sense, what we intend to do is, let's say our Bitcoin per share is 0.05. Our intent is to be able to grow that to 0.06 Bitcoin per share, 0.07 Bitcoin per share. Where a vehicle like an ETF, your exposure is static. So 21's an operating business, and we will be building Bitcoin products, Bitcoin operative cash flow, and then using the capital markets to accretively grow the Bitcoin on our balance sheet. So we want our shareholders to get wealthier, get richer in Bitcoin terms, and our metrics encourage the market to view us not in fiat terms, in Bitcoin terms, because we're not here to necessarily beat the market. We're here to build a new one and encourage the world to adopt Bitcoin in a sense that we believe it hasn't yet.
Jack, you already have a Bitcoin product, and it's Strike.
Yes.
And it's where people can buy, sell, store their crypto. What happens to that? Are you still going to be leading that business?
Yeah, I'm the CEO of both companies. We're actually disclosing today at Strike some of our financials. So Strike, immensely profitable. We have over 20% EBITDA margin, 85% gross profit margin. We have only 75 employees. So on a gross or net profit per employee basis, we got to be one of, if not, the biggest in the Bitcoin space in that regard. And so it's an incredibly strong business. It's doing well. I'm so proud of the employees and our investors and thankful for our customers. And, Caroline, you can just do things. And I'm going to lead both businesses. I truly believe my purpose on this planet is to try and help Bitcoin have a chance to change the world in what I believe is the right direction. And I think Strike and 21 both independently work towards that.
Jack, you have plans to raise capital, and I guess not just like as a one-off, over time raise capital, right? How will that work in practice? What mechanisms will you use? And a lot of people that watch the show ask, if they're not registered institutional investors, how can they participate in that?
Yes. I thought for a second you were going to offer me some money to buy some Bitcoin.
Absolutely not. Absolutely not.
I'm kidding, man.
Go with my actual question.
No,
Yeah.
totally. So listen.
Dude, that part was so awkward last night when I saw it. I was like, why is he being so aggressive? Like, he made a joke. I was just like, he's like, absolutely not. It's like, it's a joke, bro. Relax. It's not that serious.
What mechanisms will you use? And a lot of people that watch the show ask, if they're not registered institutional investors, how can they participate in that?
Yes. I thought for a second you were going to offer me some money to buy some Bitcoin.
Absolutely not. Absolutely not.
I'm kidding, man.
Go with my actual question.
No,
Yeah.
totally. So listen, we are hopeful to have our shares listed on a stock exchange under the ticker XXI. Today, we are trading under CEP, which Caroline mentioned is our Cantor Equity Partners, and that stock is trading in live today. If it's successfully merged upon closing, it will be XXI. We do intend to raise as much capital as we possibly can to acquire Bitcoin. Again, my one rule to my shareholders is it will be accretive. Our Bitcoin per share will grow. We will never have Bitcoin per share negative. At least that's our intent. Our intent is to make sure that when you're a shareholder of 21, that you're getting wealthier in Bitcoin terms. And that's my job as a CEO to deliver that. So we plan on raising capital in all different type of sectors and markets and really blending Bitcoin and incorporating it in the traditional financial system to deliver a powerful equity to the public markets for Bitcoiners.
Is that?
There you go. CEP. That is why this thing is pumping over 100% in the past. Oh, wow. It got halted. Look at that. Just got halted right now. I guess it was up about 80% right here. Just got halted, 31.49. Now, Jack Mallers, although some parts of the interview might have seemed a little cringe, he is a Bitcoin OG, and he's been preaching the Bitcoin thesis for a very long time. If you're in the crypto community, you obviously know who he is. I wouldn't say his brand is as big as Michael Saylor's, but his brand is up there in terms of actually building products that are crypto native, and a lot of people respect him in crypto. That is why I think CEP, which is basically like a pseudo SPAC kind of thing, it's like an instrument of vehicle in order for them to be able to raise capital from the public on their Bitcoin treasury. And so that's why I think it's getting so much momentum, because people know the guy and they know his history. They know he's like, his intent is not to scam people or anything like that in the context of crypto. I don't think he's ever been involved in FTX or any of the controversies. And so from that perspective, that's why it's pumping. Now, what does a company look like that just buys a bunch of Bitcoin and builds products out of it? Well, we have a case study, and that case study is called MicroStrategy. Now, they haven't really built products with their Bitcoin. They haven't done a lot of staking and lending and all that stuff, and Saylor says he wants to get into it. But they bought over 500,000 Bitcoin based on this idea of convincing the public to give them money, let them keep diluting shareholders to just acquire more Bitcoin. And they measure it, Saylor does, in Bitcoin per yield, or the Bitcoin yield per share. I think that's what Jack was talking about when it comes to Bitcoin per share versus earnings per share. And so if you believe in that, that's the thesis. And that is why he believes his purpose on earth is to buy some Bitcoin. So there you go. That is why that thing is pumping. I wouldn't chase it right here. I do think his answer on why it's different than IBIT wasn't the most convincing. I mean, if you buy, IBIT, you have 1-to-1 exposure on Bitcoin. If you buy into Jack's fund, you're basically trusting that he will be able to give you more than 1-to-1 exposure, just like Michael Saylor gives you a higher premium to net asset value based on whatever the reason is MicroStrategy trades at its multiple. So you would have to really be trusting that he can get you a better yield, a better Bitcoin per share than buying just a 1-to-1 correlation of Bitcoin via IBIT. But that would be the logic for why people buy this over the ETFs. Palantir 105.44, baby, up 4.6. We hit 105.62. Look at NVIDIA flying with Palantir 105.20. And Tesla decided to join the party today. Tesla up 2.5%, 257. Tesla up 2.5%, 257, following from yesterday. And then Hoodie, are we at 48 at all? We're at 47.79. She wants 48. We're not there yet, up 7%, new high of day. But we are not at 48 yet. The interviewer was mean though, bro. Like, I remember hearing that yesterday. I was like, I had to rewatch it a couple times to be like, was he actually joking? Like, was the interviewer joking, or what was? And like, you rewatch it, and he's like, answer my question, and I'm like, dude, like, I feel like that's a bit aggressive. Like, he made a joke. It's not that serious. So that was kind of weird seeing him that angry for a guest. But yeah, nonetheless, if you want to engage in 21 Capital, CEP is the instrument to be able to get there. That one is still halted. It is not unsuspended yet. So it looks like that one up 80% yesterday, or today up 50% yesterday. That one is getting a decent chunk of momentum. SoFi right here, 12.21, SMCI 34.29, ASML up 2.69%, D-Wave still up 5.6%, MicroStrategy basically flat on the day, Tesla 2.2, and then Robinhood trying to get to 48 Dolores. Guess no 10:30 slam. I mean, we got 6 minutes until 10:30. Maybe, but as of now, not too crazy. Artem, thank you for the super chat. How about a season finale of you on the meetup? I think we will hopefully be talking and networking during the meetup instead of watching you. Although I'm not opposed to it. We get a big screen. We got a nice location. We turn on you. I'd be down to watch it. No, but in all seriousness, I think that's one of the best shows on Netflix. And so I'm excited for that to come out. I think it's going to be one of the top shows watched for the next couple of weeks in America on Netflix. Like, I think that show is going to really get a lot of momentum and get more people to care about it. I'm not sick. I don't know why I started coughing randomly. Kris was sick yesterday. Maybe he gave me a little bit of his cough. No, thankfully, knock on wood, I haven't been sick in like 2 months. And the last time I did get sick 2 months ago was the first time in a couple of years. So hopefully, but I did check Toronto. Dude, Toronto's cold. I thought like in New Jersey is like 70 degrees. I thought Toronto's like 40 degrees. So I'm going to like bring some cold. Yeah, it's 49 degrees today. It's cold. So I will bring some hoodies. I did not think it was that cold, but then I realized it's up north. So makes sense that it's cold. 47.93 on Hood. Come on. We got 5 cents for 48. Let's see if we can get there. 48 for Hoodie. Let's see if there's a shot. Again, there's 20,000 shares sitting at 48. Maybe there's a shot to get there. Everything else holding on to the green. SMCI, ASML, Google. We'll talk about Google in a second. Palantir right here, 105, still holding 105, and then NVIDIA, 105.15 as well. Hey, Amit, we just had a special presentation at work talking about our new partnership with Palantir. So exciting. Wow, that's awesome, Katie. Thanks for letting us know. That's super cool. There you go. It's so cool to see people who are part of the Palantir community in their work actually see Palantir. And a lot of you have reached out that you guys have actually used Palantir software, and companies are starting to procure it. Someone that I know overseas, his company recently started procuring Palantir and beginning to demo and play with it. So I think the growth is coming. I think the growth is definitely coming. Damn, Robinhood gets rejected every time trying to get to 48. 47.95, we couldn't get it back to 47.75. We weren't able to hold up. All right, is CEP unhalted now? CEP? Wow, dude, 111%. My goodness, dude. Holy crap. I think this is going to be kind of a Webull situation where it pumps like crazy. Granted, it's tied to crypto, so Webull's tied not to anything, right? It was just like purely memes. This one does have something that could get people to keep staying with it, which is Bitcoin and their whole Bitcoin thesis. 102% on the day, but I would not be surprised to see this one fall off pretty aggressively. Yeah, this is not really an IPO, but it's kind of an IPO. It's not an IPO, but it's kind of an IPO. For those asking for the Toronto detail meetups, I'm going to put the form right here in the chat. This is probably the last time you can sign up for it, and I will send an email with the details, but it's going to be happening this Saturday. And yeah, if anyone wants to come through, there is the link in the description. Did we get 48? Did we get 48 on Hoodie? Wow, we finally got it. 48 on Hoodie. Broke through 20,000 shares. Not bad at all for Robinhood. Finally broke through. I think we might have a chance to hold it. Palantir still holding 105, and same with NVIDIA. S&P goes to, are we up 1% on the S&P? We're up 1.2%. Oh, this is a real green day. This is really green. This is not just a little bit of a tech rally anymore. This is a green day. 1.2% on the S&P. This is what we lost yesterday. Yesterday, we were up 3.2. We ended 1.5, which means we lost about 1.5. Now, right now, we're up about 1.2. So we're regaining a lot of the gains that we gave up yesterday. This is nice to see. Very, very, very nice to see. Congrats, everybody, on Palantir and Hood today. 48 on Hoodie, 105 on Palantir. Grab is, wow, holy crap. 463. We haven't seen that on Grab in a minute. We haven't seen that in what feels like a month. 6% on the day. It looks like whoever bought those 450 calls yesterday for next week is going to have those calls be able to print as of now. All right, dude. Good earnings from Grab, Hood, and Palantir over the next 2 weeks. It could be a strong Q1 for those three names. As long as the macro holds up, we could get some good results. Tesla right here at 256, up about 2% currently right now. I just tuned in. Why the Palantir pump today? Because of the new Google partnership. Palantir is pumping not because of Google today. The Google stuff was announced yesterday. I think Palantir is pumping with the market and with the overall SaaS sector led by ServiceNow, which is an indicator on how well the SaaS sector is doing every quarter. They're up 15% on the day. That is pumping Salesforce, Snowflake, Palantir, Datadog, all those guys. And so that is why I think we are seeing that momentum. And then if the S&P goes up 1.2%, that'll help Palantir. Okay, let's talk about Google. So we got Google earnings today, 160 on Google. Let me do the pump or dump poll in the chat on Google. 51% of you on the last poll said you believe we are done with the worst of it. Let's see what the sentiment is on Googs. Google, pump or dump? Thoughts on Jeremy selling Tesla? I reacted to his video yesterday on the market close. So we spent about 30 minutes talking about it. So you can go on that close yesterday. My takeaway is I wouldn't have sold if I had a $13 average, just because I don't know if the opportunity cost of selling and reallocating that capital outweighed the potential of FSD and robotics. But he made some pretty compelling arguments about the core nature of the business just deteriorating. And one thing that surprised me is he said he would not be interested to buy Tesla again until we see $120, which maybe that happens, but I don't know. It just feels like that would have to be a dramatic decline. So he kind of doesn't care. It was kind of one of those videos where he's like, you know what? I'm out. I've been here for a long time and I'm done. and I guess he will be taking that money somewhere else. But I personally probably would have held on. Halted again. Wow, it's halted again. CEP. Damn, dude. $38. It was unhalted at 32. The thing just keeps running. Jack Mahler's raising a ton of money through the public markets right here for this vehicle to get access to more Bitcoin. All right, cool. So let's talk about Google. Here's my thoughts on Google. I think there's a bull case and a bear case in the context of Google. Google right here, 157, up about 1.4%. Wow, 76% of you say pump on Googs. 76% of you. Okay, so let's talk about why we would pump and why we would dump. First, why we would pump. Google is trading at 18 times earnings and 15 times next year earnings. That is cheap. I don't care what anyone says. A tech company the size of Google doing $400 billion in revenue, worth $2 trillion, doing $80 billion of net income, that's buying back $75 billion of their shares. When you trade at 15 times next year's earnings, you are cheap. So I think from that perspective, in and of itself, this is not Google at 190, 200, which is where it was last time before earnings where it dumped. It was actually at 215 and it dumped all the way to 175 that day. It's Google at 150. And so we've seen this before. We saw this in July of 2024. Google was basically at the same range, 152, 153. We pumped all the way to 185, and they didn't even announce anything that special. They said YouTube Plus or YouTube Premium or Google Premium, whatever it is, their Google One product has 100 million subscribers. They said search revenues are growing 14%. They're buying back their shares. And Sundar didn't really have the best response to LLMs taking away from the search business, but he had enough of a response on the call where I think the market was like, hey, Google's going to be able to figure out how to incorporate AI into their LLMs, and ChatGPT is not going to steal their lunch. I think the same thing is going to happen today. I think they're going to be buying back their shares. They're going to grow top line on revenues and EPS. They're going to beat expectations, especially because expectations came down. They are going to show that premium subscribers to Google One, YouTube, et cetera, are growing, even if it's not getting to like 115 million or something. It's still growing pretty nicely year over year. I think they're going to say that search revenues have not been commoditized by ChatGPT. Now, if they do say that ChatGPT, if they meaningfully think it's taking away some of their momentum, which I don't think they're going to say, that could be a headwind, but I don't think they're going to say that. Robinhood back to 48. And then finally, I think Sundar, in my opinion, should spend time telling the market about the two verticals that the market is fundamentally discounting. Number one, Waymo, which is, yes, not like what the Tesla bulls would say is the perfect solution to robotaxis, but they're doing 200,000 paid rides a week. I mean, you can't tell me that's not something that you give a multiple to, especially given it's subsidized by Google. And so you would think you get a little bit more premium there. And then robotics. You know, Elon's pumping Optimus, but Optimus so far has not really shown massive results. Google just invested in Apptronic, which, yes, is probably not at the level of Optimus, but they put in a good chunk of money, and they're using DeepMind, which is their sort of AI brain, to power Apptronic. So I think when you look at Waymo, I think when you look at robotics, I think when you look at search revenues, I think when you look at premium subscribers, I think when you look at the multiple, you put all that together, along with the fact that they have Gemini 2.5, which is becoming a big success. Like, none of these things are reasons to say Google deserves to go back to 120 or 130. Qs, by the way, up almost 2% of the day. We are really getting some green momentum right here. So look, from that perspective, that's why Google would pump. Now, why would Google dump? Again, 76% of you saying you think Google will pump. Why would Google dump? I think Google would dump if they don't give a story that's exciting to investors for the future. Fear and the Greed, by the way, back at 30. So we're up from 27 where we were yesterday. If Sundar sounds uninspired, if he can't get the market to kind of really see the Google vision, because why is Google trading at this multiple? Because people aren't inspired by Google. It's just that simple, right? Google is not capturing people's attention and inspiring that they're going to be one of the biggest AI companies in the world. And that to me comes down to, again, communication. Obviously, there's a difference between Tesla's multiple and Google's multiple. Google's earnings are a gazillion times better than Tesla's earnings, but the multiple that Tesla gets is way better than the multiple that Google gets, because I think people love Elon and they love the storytelling of it. I don't think Sundar has to go full on Elon and give these crazy promises. I think he just has to say, hey guys, we're freaking Google. Like, we've got $100 billion in cash. We're buying back our shares. We get 88 billion visits a month to our website. That has not been going down, even though ChatGPT is going to get a ton of usage. We've got Gemini. We've got the new AI mode for search. We've got Waymo. We've got Apptronic. We've got all these. We are trading at 15 times. You can't say that, but you could say, hey, the market is probably discounting a lot of the things that Google is gaining momentum on. And I think the inability to communicate that in a meaningful way is going to create some issues. So Sundar stories are always boring. Yes, Sundar, I know a lot of people don't like Sundar. I am a fan of Sundar, but his storytelling on earnings calls is bad. He just sounds uninspired. He sounds robotic. And it's like, dude, you're the CEO of freaking Google. Like everyone's saying, oh, Perplexity is going to take Google's lunch. If I was Sundar, I would just get on that earnings call and be like, a lot of people are talking about companies like Perplexity. And quite frankly, I'm perplexed that people think Perplexity has any shot of taking our lunch, right? Like that's how I would start off the Google earnings call. Unfortunately, Sundar doesn't like speaking that way. And so when you're not really getting people inspired, I think the multiple can get hit. They had a lot of the DEI issues last year where Gemini was, putting out really weird images. Their AI stuff was in a weird space. And a lot of that's been resolved. People have kind of forgot about all that stuff. Now it's just a question of, hey, are you an AI play? That's it. Are you an AI play? And if you are, why the hell are you trading at 15 times? Why is not everyone buying more and more Google? Oh, I forgot to mention Google Cloud is growing faster than Amazon and Microsoft. It's not at the scale of Amazon and Microsoft, but to discount Google Cloud, given how profitable it is and the fact that it's growing 30% year over year, also is something that I think he needs to highlight and say, hey, AI workloads are increasing and GCP is going to be here to be able to continue getting more momentum. So those are my thoughts on Google. I think if they do that, then I think we should have some more momentum on this stock. I do have a Google position. It's mainly through leaps. I have leaps that are about 2,500 right now. So I am back holding those. I've sold covered calls against them throughout the year, made a little bit of premium on those calls every week selling against them. But overall, I'm still bullish on Google. It's just with NVIDIA down and growth rate compared to Google, that's why I've been choosing NVIDIA over Google. I would not be afraid to buy Google. I'm just really curious what they're going to say on earnings. Also, one thing I should say that could hurt Google is if they say ad budgets are going down because of the tariffs. If they say ad budgets are going to get hit because of the tariffs, then yes, we could see a little bit of pain on Google as well. Speaking of Google, antitrust is another thing I forgot to mention. We got the FTC chair on CNBC right now. Let's see what he has to say about the antitrust environment, see if there's anything we can get from him. But that's another thing Sundar is going to have to talk about: Google Cloud, antitrust, and then the overall environment for AI CapEx spend that they're going to try to capitalize on.
As quickly as possible. Deal flow is part of how this country grows. It's how capital moves to innovators who have great ideas. M&A is part of how we have that capital flow. It's how we protect.
Wait, is my mic on? Is my mic on? Holy crap. Okay, it's a good thing I caught it right. Is my mic still gone? Yes, no. Dude, every time around this time during the show, the mic gets a hit. Okay, now it's good. Okay. The last thing I just said was, hey, the FTC chair is on CNBC, so let's see what he has to say about antitrust, given Google is dealing with a ton of antitrust stuff. So that's it. Did I get a new Mac yet? No, not yet. But dude, there's 4 tabs. I swear there are 4 tabs open. There's CNN, YouTube, StreamYard, and YouTube TV. This is ridiculous. Absolutely ridiculous. 10:30 Audio Slam. Yes. The last thing I said was antitrust is an issue for Google. Google Cloud is glowing and growing. So now we just have to see if the FTC is going to crack down on them. But that is also another headwind for what they're dealing with as well.
Protect that capital flow. I am in favor of deal flow, but I'm in favor of antitrust enforcement too. So, I want to enforce the antitrust laws, but if they aren't being violated, we got to get out of the way.
You think she wasn't in favor of deal flow?
Look, I think that the previous administration generally was very suspicious of mergers and acquisitions, was very, very suspicious. I am not at all. I am pro antitrust enforcement and I am pro innovation and growth. And we have to strike that balance. And that's what we're going to do.
I feel like investors got all excited about the deregulation, especially in places like the FTC primarily. But then, the administration, the DOJ comes and blocks the HPE deal. And now you're in court with Meta to try to break them up. And they're wondering how much deregulation we're actually going to have.
Well, we're going to have lots of deregulation. President issued an EO directing me and the FTC to lead the charge on getting rid of anti-competitive regulations. We've asked the public to tell us what the anti-competitive regulations are. We're going to be asking agency heads to give us all of their regulations they think are anti-competitive. And then we're sending a list to the White House recommending deletion of anti-competitive regulations. So we're all about.
Okay, so this guy looks like a stickler. It doesn't feel like he's going to be letting up as easily on the Googles and Meta of the world. That's the other thing I forgot to mention on Google. If ad budgets come down, that's not going to be good for Google, right? If they say, hey, companies are telling us based on the tariff volatility, they're taking down their ads. I don't think that's going to be that big of a risk because at the end of the day, the tariffs have not gone that crazy to the point where I think companies just pull their ad spend. Maybe they lower it slightly, but that shouldn't affect Google's fiscal year earnings. But if Sundar warns about that, that's an issue. And then in terms of antitrust, if he warns that antitrust is a real concern, that could also be an issue for Google as well. So you've got cloud growth, you've got search growth, you've got YouTube growth, you've got antitrust concerns, and then you've got the overall AI narrative on Google, which includes robotics, self-driving, et cetera. I think those are the 5 things to look about if you are a Google shareholder. And those 5 things need to go in the positive, in the right direction. And if they are, I think Google pumps, which I'm expecting a pump. That's my answer. I'm expecting a pump because I think at this multiple, it's just undervalued. And those 5 things could go in the right way. But the reason it's trading at this multiple is because of those 5 things not going in the right direction over the past couple of basically months. And if we see a trajectory shift and we see Sundar talk with a little bit of energy on the call today, I think that can help. Grab right here up 5.8%. Hoodie still at 48. S&P, look at her go. 1.3%. New high of day for S&P. Yesterday we were at 545. Right now we're at 542. Service now up 14%. Cantor Equity Partners unhalted, still up 95%, even though it's down from 38, but still up 95%. Amazon's up 2% as well. It feels like there's some news, right? It feels like this is not just a natural 3-day momentum of green. It feels like there's something that's going to be announced to cause this type of green. And I don't know what it is. Trump's going to be speaking in an hour. Maybe he'll say something, but it does feel like there's something else going on right now. Amit, make me feel better. I sold out of Hood at 45 today. Well, look, if you made some profits, you made some profits, right? I mean, if you made some, you can't go broke. This is such a cliche, but you can't go broke taking profits. So it is what it is. In terms of selling today, I mean, dude, like it's just so hard to time it, right? So it's like, if you sold, you sold. If you have a long thesis, you stay strong. If you're day trading, it's whatever, right? Whenever you're day trading, you're always going to miss a couple dollars up or down, right? You're never going to get the perfect entry. Now, granted, if you've been in it for a while and you sold today at 45, I don't know. I would have just waited until earnings just to see. That's what I'm doing. I have a lot of Hood options, dude. Like a lot, like a bit too much. And so I'm waiting until earnings to probably de-risk out of some of them. But if the earnings are really good and we get a nice macro pivot, maybe I don't de-risk that heavily because that would just be a lot of increased leverage going into what could be a bull market. But realistically, I think I'm gonna have to take down some exposure because I don't know if you can trust that options in this market necessarily are the best move. 2023, 2024, every other day, it made sense because you could see the momentum continuing. But now there's just so much unpredictability. Like right now, it's blistering green. We're all happy. We all know what it feels like when all this goes away. And we've experienced it many times this year. This is why I always just buy shares for the long term. Yeah. I think it's always good to have trading shares and long shares. And with those trading shares, you can sell calls against them, and then it's okay if they get called away, right? Because you're not emotionally attached to them. But with your long shares, if you just keep them and you sell very conservative covered calls or just like don't touch them, then you never have to worry about never fully having exposure. Trump tweeted, oh my goodness. All right, what did he say? Huh. Okay, we got some China stuff, folks. Here we go. Okay, from Trump, tweeted at 10:43 a.m. Here we go. Boeing should default China for not taking the beautifully finished planes that China committed to purchase. This is just a small example of what China has done to the USA for years. And by the way, fentanyl continues to pour into our country from China through Mexico and Canada, killing hundreds of thousands of our people, and it better stop now. Okay, so are we dumping? Dude, it's like clockwork. It's like freaking clockwork. We got a red candle. It's a small one, but 543 to 541 on the S&P. Robinhood, look at that, 48 to 47.80. It is literally clockwork. This is not that bad of a tweet, though. He's just saying that Boeing should be more aggressive with China. Boeing right here goes red. I guess the reason the market thinks it's aggressive is because he's upping the tensions with China in a world in which everyone needs them to de-escalate to get closer to a deal. And so the interpretation from that for the markets might be sell stocks because he's getting aggressive. That's my best guess to explain why we're seeing this red candle. Trump's tweets are the same video as my fiance after she gets done working 4+ night shifts in a row. You don't know what's going to happen and you're low-key scared. Oh my gosh. Oh boy. Well, let's see if the markets can recover from that. Whoever sold Hood at 45, I mean, we might get back there if this continues today. Oh my gosh. Boeing should default China for not taking the beautifully finished planes that China committed to purchase. What does he mean by default China? What does that mean? How do you default China? Boeing doesn't issue debt to China. Is he saying Boeing should never give a purchase order to China? What does that mean? Default China? Like, does anyone get what that means? I'm ignorant on this. Boeing should default. What does that mean? Default China. Let's ask Grok. Let's see what Grok says. Let's see what Grok says. Markets still low from that intraday high right after that tweet. We got red candles across the board. They're not crazy red candles, but we do have a little bit of red based on that. Let's see if we can recover and move forward. Let me see. Grok, what does Trump mean by this? Okay, let's see what Grok says. Let's see what Grok says. Grok says, it sounds like Trump is advocating that Boeing should consider China in breach of contract for refusing to accept delivery of planes. Oh, that makes more sense. Oh, yeah, Boeing should sue them. Oh, okay, that makes a lot more sense. Yeah. I don't think Boeing wants to sue an entire country, dude. S&P, by the way, there's that red candle getting a little juicier. I don't think Boeing, especially for future business, I personally don't think they should sue China, and I don't think Boeing wants to freaking sue an entire country to buy their planes. Because inevitably, when this trade war is done, they're going to want to sell to China, and I don't think China's going to want to buy planes if he sued them to buy them. Like, I don't think that's a crazy statement. But, yeah, that is creating a little bit of pain right there. Let's see if we can recover from that 1.4% on the day down to 1.07 on the S&P. Grab still holding up, but it's got a red candle. There's the red candle right there. Service now was up 15. Now it's up 13.5. I mean, either this is just a oddly timed coincidental red candle as soon as Trump tweeted something, or this is because of the tweet. It might be potentially because of the tweet. But I guess we are going to find out right here. Let's get a little bit more coverage in terms of what's going on in the broader markets. We saw the home data. Let's get some more macro data, look at some of the earnings that we had, and then we'll keep going from there, and we'll see. I think Trump goes live in an hour, so he's probably getting ready to say some more things as well later today.
Yeah, not to mention delays. You know, the de minimis rule kicks in next week, and that's been a big one for the shippers. It's going to just cause a lot more friction at the point of entry. All those cheap packages that used to just fly by now are going to have to pay higher tariffs. Just the time and the process of that could be onerous. You know, we're starting to hear from corporate America, too, about how this is affecting everything. I just got off the phone with Ramon Laguarta of PepsiCo. Pepsi out with earnings this morning, lowering its earnings forecast, basically not projecting earnings growth this year. They still say they're going to see sales growth, but we talked about a few ways that the company has impacted by all this. Number one, the consumer. I mean, Pepsi's been talking about a stretched consumer. He said now there's consumer sentiment questions about what does my future look like, given all the uncertainty and the news flow. He sees that in the sentiment. He sees that in the buying patterns of consumers as well. They're buying cheaper. They're buying more staple products. We heard similar sentiment out of the P&G CEO earlier on CNBC today. The other way that Pepsi's affected, most of the food that's manufactured for American consumers, it's sourced here in America, but that doesn't mean that they don't have to pay, for instance, on steel and aluminum tariffs, which come from overseas. Some of the caffeine products come from overseas, I'm told. So there is definitely a tariff impact. And then the other way that Pepsi is impacted by all this is the MAHA movement, the Make America Healthy Again movement. And now there's a shift. They're going to have to shift toward natural flavoring from artificial flavoring and the dyes. That's going to increase cost. So we're going to feel that as the consumer. They're going to have to pass that along. And also on the demand side, David, where Ramon Laguarta told me that, the way that they're going about this is they're demonizing big food. And he does expect sort of a negative reaction on the demand side, particularly in the Frito-Lay snacks business.
So RFK is banning artificial food dye from products. I think a lot of different products like Sour Patches, etc., all these candies, they're going to be affected by that. Let me know in the chat if you guys agree or disagree with that. I haven't done a lot of research on it, but this is one of the things he ran on. And it looks like we are going to be banning artificial food dye inside of our food now.
And it's something they're engaged with the administration about in terms of how they're rolling out these programs, and they want to work with them. But clearly it's a demand headwind at this point. So add it all up, and you can see like a company like Pepsi, which you would think, the food's made here in the U.S., it's sold to U.S. consumers, but no, there is an impact.
Yeah, there's a lot coming at them.
Real quick, we got a headline. I think this is why the market's pumping today. Here we go from Fox. People inside the Trump White House are alerting Wall Street executives that they are nearing an agreement in principle on trade with India, according to sources who are senior Wall Street executives with ties to the White House. No details on timing, and recall that we have been here before with Japan only to have the goalposts changed and terms renegotiated. But if this holds, the India deal being envisioned will include agreed upon goals and issues that have been addressed and resolved, as well as a deadline for a fully baked trade pact, which is really important. If we get a deadline, the market would love that. Sources say it could be used as a template for a deal with Japan, South Korea, and Australia. Bessent had no comment, but would not deny the matter when he was reached out for by Fox. Okay, there you go. That might be the reason why we're getting this pump. Again, we've heard this story again and again in the context of a variety of different companies or countries, whether it was Japan, South Korea, etc. But it looks like if we are close to India, then that might not be the worst thing for the markets.
Many companies are frozen by tariff uncertainty. I'll get to that in just a second. Meanwhile, we had an exclusive interview with the new Cleveland president, Beth Hammack, and she's a little bit more circumspect. She says the two sides of the mandate could be in conflict with higher inflation and lower unemployment. If we have clear, convincing data by June, she says, I think you'll see the committee move, but not clear that'll happen. Speaking of what companies are doing, the durable goods report this morning, obviously the big surge on the pre-ordering or the front running on the airline parts, but it showed that CapEx rose by just 0.1%. And Sarah, I don't know if you got a good chance to read the Beige Book yesterday, but I would describe it as the one before that tells you there could be a downturn in the economy.
I mean, Beige Book has been pretty negative, really, in the last few sessions. So I feel like it always leans a little negative in the commentary there. But Steve, this question about what Waller brings up, and yes, as you say, he's been consistent. Like he's not too worried about persistent inflationary effects of tariffs. Feels like that's going to be the key debate at the Fed. And I wonder how many are on his side of that and where the chair is at this point and what that even means. Because like I spoke to the Pepsi CEO this morning. They have to switch from artificial dyes into more natural dyes. That is going to be more costly. You'll see an increase in consumer prices that will stay. So is that something the Fed should look through or not?
Well, it's a good question. And I'll tell you some old arguments that are out there that have not been resolved. The one about the idea that we just came through this idea of inflation and people might be more sensitive to the possibility that inflation expectations are more tenuously anchored now, perhaps, than they have been in the past. That's a key right there. You did see the line in the Beige Book yesterday talked about margin compression. That's also another word for companies absorbing some of the cost increases. Nobody really knows. I would suggest that Waller is much more on the dovish side. I think Hammack is more at the center of the committee. And to answer your question, where Fed Chair Powell is right now, which is much more, we need to wait and see and be sure this is a one-time increase. That said, I think it's clear, and I think Waller is suggesting this, if there is a big and quick deterioration in the job market, that's going to push up the odds of the Fed acting.
Which might be too late. And that's what everyone's worried about. But we're going to have to see how the Fed decides to play this out. We are recovering, folks, from what we lost if we did lose it from the Trump tweet. Look at that, S&P 1.3. This green today is pretty damn resilient. Pretty damn resilient, dude. We went from 1.4 down to 1.07. Now right back up to 1.3. Robinhood getting a green candle again. Grab going green. Google going green. S&P going green. Again, that India headline is old, by the way. I mean, it's a couple hours old, but at least I think that's the best explanation for why we're getting this green. it's the idea. Maybe that's why we even opened green. It came out around 9:30, that headline from Fox. It's this idea that, hey, we've got a trade deal in principle that has been negotiated and will be announced soon, even if it's not literally signed for the next couple of weeks. So yeah, that's not horrible. I mean, seems like markets like can get 254 on Tesla. Bitcoin's red today, which is weird. Where is Bitcoin? Or it's not, is it red or is it flat? Bitcoin, well, it's up 0.5%, but IBIT is red. Bitcoin itself, 93 right here. That's green slightly. It was down from 94.7 yesterday. S&P continues to keep chugging along. Market's kind of brushing off that Trump Boeing comment and moving forward. Looks like the India deal could be propelling it right here. INQQ, this is the India ETF that my uncle was talking about a couple months ago. This one's up, I think for the week, it's up pretty nicely. It was at 14 at one point. INQQ for, the past month, it's up about 5%. Past couple of days, it's up about 5%. Year to date, it's still down 5%. But this one was in the 13, 14 range. India was going through some issues over the past couple of months. Looks like we got capital that's flowing back and narratives that are shifting back to being bullish. India. Where's the dollar today? Dollar is slightly down. Okay, so dollar's getting slowed off a little bit. Let me check the 10-year. 10-year was down during the day in the opening. 10-year still down, not down as much. Ticked up a little bit. But it's definitely not going green, which is good. Check for the last 15 days. Okay, so 15 days ago was what? Beginning of April? April was, oh yeah, wow, this thing got to 1360. So if you look at it from the lows, this thing is up right now. Yeah, 15%. There you go. Again, I got to get him on the show one of these days. We've been meaning to have this conversation for so long, but just everyone's so busy. But this is the India ETF that he believes in, because this holds all the platform companies, the DoorDashes, the Ubers of India, etc. And you've got a massive growing middle class that is getting ready to spend on these products. And so you're seeing them start to grow a lot more. Did Mexico just give us some news? Hold on. I think we got some news from Mexico. Trump expected to sign executive order on Thursday to advance the deep sea mining industry. That's a headline we just got right now. I think there is some Mexico news. Let me see. Yes. Okay. Mexico president says meeting with Bessent was very good. Boom. Mexico president says meeting with Bessent was very good. In this market, that is enough, dude. We just need them to say they like each other. We just need Mexico to say they like the United States. That's all. Because that was in question for the past couple months, if we actually still liked each other. So Mexico president says they had a meeting with Bessent. It went good. We don't have a deal yet with Mexico, but hopefully that India deal sets up the framework for a Japan, South Korea, and Mexico deal, and then hopefully a Canada deal as well. Maybe, if we're really stretching, get an EU deal, but that one might take some more time. And that could hopefully get us some more momentum. S&P 500 still up about 1.3% on the day. Can you go over Big Bear AI? Is that company dead? Look, Big Bear AI does have some government contracts, but I think people got obsessed with this one because they saw it rally to $5 back in February. I mean, look, they've been around for a while. I'm not saying they're a horrible company, but I'd rather buy Palantir at any price, to be honest, over big. Like, it's just, some of the there's sometimes you pay up for quality, and so this one had a big run. A lot of people got into it. Now a lot of people are bag holding, and that's kind of just what happens with these names. They have AI in the name. I don't know if that means they're a really amazing AI company. They do have some government contracts, which is why I think they're more legit, but they don't have some massive, huge commercial business like Palantir that's growing at any level. So, yeah, I mean, look, I don't think it's a horrible company. I think it can do well. I just think a lot of it was based on hype back in February. And so now it's going to be up for earnings to be able to prove the momentum. S&P is still holding on to its green. Google up 1.68%. Amazon up 2% on the day. So Amazon really liking this India news. And then Grab up 5.5%. All right, it's not bad, dude. It's not bad. It's a green day. It's a green day, at least so far. It's a vibes-based economy. Yes, literally. It is a vibes-based economy in a lot of different sectors. And again, the Fed presidents today, one of them sounding hawkish, one of them sounding dovish. I mean, you've got just more confusion to try to figure out which one matters or which one we should take seriously. But that is the nature of these markets. And until we get actual hard data from the Fed, we're not going to know if the Fed wants to cut or wants to pause. Here's an update on China. Again, their foreign ministry said they are not talking with the United States yet, even though the White House is saying, hey, we've started getting some calls back and forth. But this is what China had to say on trade talks with the U.S.
All unilateral measures on China. So this tougher stance comes as a perception is growing here that the Chinese government is really trying to foment that the Chinese have the upper hand and that President Trump is in a weaker position. The hashtag Trump chickening out has been trending with 250 million views. State TV has also been using one of the memes that has bursted onto the scene here when mocking President Trump officially, calling him the 10,000 tariff grandpa and saying that his constituents have been suffering because of some of his actions. The other memes that are going around, King Know-It-All and Trump the nation builder, but that nation is China. Guys?
They got it. It's not exactly like their economy is doing well. You speak to Dow, they'll tell you that residence is bad. They'll tell you commercial is bad. I think that the actual phrase that everyone's taken over is an embargo. I don't understand how a country that has got an embargo by the largest country on earth is able to poke fun. I don't know whether that gets things done. Now, maybe you don't want to get things done, but that means I accept the embargo. Is that what they are doing?
Well, I think that the answer would be yes in some ways, because they understand that this is going to be very painful. They understand that this is going to be hard on the economy. It won't necessarily topple the economy into recession, as some of the concerns are in the U.S. I think one big difference that people should understand is that the political systems are very, very different. This is an authoritarian regime. And so the government, though it has to be somewhat responsive to the Chinese public, doesn't have to be as responsive as the government in the United States.
And that's actually a big point, bro. And one of the reasons I think it's a big point is because I've been watching a lot more World War II documentaries and kind of understanding how China became China. Dude, in the United States, Kris made this point yesterday. If we don't like Trump's policies, we can vote him out. If we don't like Biden's policies, we can vote him out. You can't vote out Xi Jinping. And so if he says, hey, the economy is going to operate in this way, we're going to keep a hard stance with America, we're going to have this massive trade war, no one can just vote him out. So China does have, like, just logically a bit more leverage there because they're not a democracy. And so they don't have to acquiesce to the needs of their people. And if people go hungry and die or whatever, Xi Jinping has done worse. And he doesn't really care because he wants to win. So from that perspective, it's going to hurt their economy badly, but they don't really have to be that scared of him, like, losing in some presidential elections, because they don't really have elections right now. Okay, TMC is up 34%. You guys have been talking about this one, I think, for the past couple of weeks. I think the thesis on this, if I'm not wrong, is attached to semis, right? This is a small cap that's pumped big over the past couple of weeks. I don't own this name. It's called the Metals Company. Year to date, it's up 183%. I would not be chasing it right now. I don't chase anything. I don't chase Big Bear. I wouldn't chase TMC, but this one did have a lot of momentum over the past month based on where it's being interpreted by the market. Trump's tweet just pumped it. Why would the Boeing tweet pump this one? Why would the Boeing tweet? Does anyone really understand the thesis on this? I don't think a lot of people understand the thesis on this one, but it's been pumping like crazy and people have been talking about it. It's just a small cap, so I don't think a lot of, the deep sea. Oh, you're right. The deep sea mining stuff. Yeah, right. That makes sense given their metals company. Okay, that's fair. That wasn't a Trump tweet. That was more of an independent source that says Trump's going to be announcing an executive order. So if that's true, then yeah, that's fair. Wow, 32%. Again, a headline-driven market. Absolutely headline-driven market. Rare earths, yeah, there you go. Where's CEP? How's that one doing? CEP still up 97% on the day. Still up 97% on the day. All right. So that one continued to get momentum. But yeah, going back to China, again, they just don't have to stress that much about their electorate because they really aren't that responsible to them. Let's get a little bit more macro coverage, and then we'll see some other headlines that we got right now.
Cap the market at that level. We've been in this box that's somewhat below where we closed on April 2nd. The market this week is offered a reminder that there is upside risk in an oversold market when hedge funds have basically got their positioning completely washed out. If you get at least perceived incremental help. The Sell America trade was very intense. Maybe there's a slight rethink of that. I think a couple things also you could point to is yesterday's down move, actually 2-day down move in gold. It's bouncing very modestly today. And then the volatility index able to close below 30 for the first time. It's all suggesting maybe that the intense moment of maximum sort of tariff scare for the short term maybe is in the rearview mirror, maybe, because obviously every one of these rallies has to prove itself. I know a lot of folks are looking at whether it's broad enough to actually trigger one of these signals that says maybe you have some kind of a durable bottom, and then the forward-looking implications months out are better. We're not there yet, but I think that's the world. It's very tactical market because long-term conviction is lacking. We don't know the rules of the road.
It's also hard to figure out, Mike, how much economic damage is being done by all the uncertainty. It's why, you know, we read into the comments from all the companies on earnings. As far as the data, when does it really start to matter? And we'll get a sense of just how resilient the economy is under this pressure.
It's a great question, Sarah, because you are in this zone where you might have some pull forward effects. You have the B of A credit card data suggesting that things were fine so far in April, at least modest growth in consumer spending. Durable goods obviously showing a lot of that pull forward. So I don't know. I'm guessing over the next several weeks is when you might expect to see some of the bite, but it's an if. We've had this situation for a while, even before this tariff episode, where the soft data and the hard data were not always matching up. And
the Fed presidents talked about that today, that the soft data and hard data are conflicting. Credit card data says it's good, but survey data says it's bad. Until we get a meaningful congruence within those two pieces of data, I think a lot of people are still going to be confused about the nature of the macro right now. Let's end out the show and get some comments from one of our favorite analysts on the Market Open. Kris, good morning. How are you?
Good, man. I'm calling from my car, so if it's not coming across clear, just let me know.
No, you're good. I got to be out of here in 10 minutes too, so we'll do 10 minutes and then we'll wrap it up.
Yeah. I think inflation is actually starting to come down. I mean, all the data that I'm seeing, especially shelter and oil, are going to lead to some crazy CPI numbers, I think, going forward. Believe it or not, Powell should actually start the cutting process in May, just a little bit ahead of time. So Trump may actually be right about it. The problem is,
oh wow, hold on. There you go.
Hold on.
People are gonna start loving you again. There you go. Kris Patel. Trump is right.
Let me preface something. Here's the thing. Even if you do want the Fed to cut, you can't come out there and saying, oh yeah, if he doesn't cut, I'm gonna fire him and all that stuff. Like, the rhetoric doesn't help.
Yeah, I agree.
Then you're questioning the independence of the Fed. And now if Jay Powell cuts, it's going to be like, oh, he did it under Trump's pressure, not because the data actually, justified it. So this is where, like, it's prudent not to comment on what the Fed should and should not be doing. Just let things be what they are. Another thing is, like, this trade tariffs thing. I think I sent you the link with Christine Lagarde, and where she basically said, it's going to be a little bit weird, but tariffs may actually end up causing demand destruction more than anything. And if that ends up happening, then you've got yourself a case of disinflation. Now,
hold on real quick to summarize that for everyone, because this is a really good point. If the tariffs increase prices, which decreases demand, you have a deflationary effect theoretically.
Yeah, not only that, but all the uncertainty is going to cause the economy to slow down. And if the economy slows down and investor optimism goes down and consumer optimism comes down, that means that they're not going to be spending money on capital purchases. And that money is going to end up basically, staying in people's wallets. One really, really big change, I'm not sure if you mentioned already, is the change with regards to student loans. If you do not pay your student loans now, you will go into collections, like debt collections.
Yep.
That is 5 million people currently that have student loans in the country. I think there's a lot of people that haven't been paying, and it's going to start impacting their credit reports. And if you think about it from like a house buying standpoint, usually it's the younger crowd that's like in the market to buy. And if that means that, hey, you're sapping away buying power by restarting, payments, that means that, once again, you're draining liquidity from the consumer.
Real quick, Kris, I just want to play this clip. This is going to your point around the student loans. The White House is not messing around anymore about paying those bills.
Has announced we will put an end to Joe Biden's illegal student loan bailout attempts. No student loan has been referred to collections since March of 2020. That comes to an end. On May 5th, the Department of Education will resume involuntary collections for borrowers with defaulted federal student loans. The student loan portfolio controlled by the federal government is nearly $1.6 trillion, but fewer than 4 out of 10 borrowers are in repayment. This is unsustainable, unfair, and a huge liability for American taxpayers. Debt cannot be wiped away. It just ends up getting transferred to others. So why should Americans who didn't go to college or went to college and responsibly paid back their loans pay for the student loans of other Americans? The Trump administration will never force taxpayers to pay student loan debts that don't belong to them. Student loan borrowers need clarity, and we're finally giving it to them. Borrowers will now be clearly expected to repay their loans, and those who default on their loan obligations will face involuntary collections.
By the way, SoFi just announced this today. Smart Start, a new student loan refinance option that gives borrowers the options to pay interest only for the first 9 months. So you've got a lot more demand theoretically that could be coming to private loan companies like SoFi when it comes to refinancing. But to your point, Kris, everyone's got to pay their debt now when it comes to student loans.
Yeah, and the other one is also housing. So if you've been following Bill Pulte, who's like in charge of Fannie and Freddie, they also changed things so that now you can't do this process of loan loss mitigation, right? So a lot of people were gaming the system where basically, let's say you took on a mortgage and you didn't pay it for 90 days. They wouldn't declare you like as delinquent. What they would do is send you a loan modification and basically modify your loan where the payments that you missed would go towards the end of your loan, and you would actually get no interest on that money. And on top of that, they would convert your 30-year loan to a 40-year loan and actually reduce your monthly payment. Can you freaking believe that? So all of these Biden era policies, like especially like post-COVID, all of them are ending around the same time. And I'm telling you, that's going to sap consumer buying power.
Yeah, technically this is bearish for the consumer, which is bullish for inflation.
Correct. Well, it means that, once again, all the things that are coming down the pike are pretty much pointing towards weakening consumer demand for stuff. And if that happens, then of course, inflation goes to disinflation and then possibly even deflation if we go into a recession. But all that means is now the interest rates are going to be forced down, So if we get into the zone of getting back below that 2% level, and I think sometimes it might even overcorrect, then you're going to end up going from QT right now because the Fed is rolling off things. It's not is doing it as much. But if you end up going back to QE mode again, where now the Fed is monetizing that debt, dude, rates will come down and you'll get back into a 2 and a 3 handle on the 10-year.
So here's the question. Obviously, Jay Powell wants to cut at the right time. You're telling me tariff inflation might create so much volatility that we get a decrease in the economy. However, he can't cut too late because then we're in a recession. I guess you can cut early, but that might stoke inflation again. So then if you were the Fed chair, how do you navigate cutting or not cutting based on demand destruction because of tariffs?
I mean, this is the hard part for him because he's seeing consumer demand weakening while at the same time the hard data isn't in yet. But the hard data comes after you've already hit a crash point, right?
Right.
So that's the challenge that Jay Powell is going to have to basically, make that determination. And it sucks because, he ended up making the wrong call on transitory. And I think that haunts him a little bit. So he probably wants to be a little bit more conservative when it comes to the cuts, because you don't want to cut and then inflation jogs back up again, and then you got to deal with that monster, and then you can actually cause stagflation. So I think right now the consumer is going to be hit by a lot of different things. And if that ends up happening, then you're going to see a lot in the future. You'll see weaker demand for goods and services.
What did you make of the housing data? The 6% decline month over month, worse since 2009. Is that bullish for inflation, or how are you thinking of that?
I think if you look at the chart that I sent you, the second picture, the inventory growth, that is the real story that I don't think people are really talking about right now. So do you have that?
Yeah, I'll pull it up right here.
Yeah.
Yeah, this is from Redfin right here.
So if you look at that data, and this is a comparison of all the years, that's 2025 all the way at the top, which is we have 14% more inventory than we did last year around the same time. Usually the spring session is when a lot more inventory comes on the market, but at the same time, loan demand has been shrinking and going down. So the number of homes being on the market, the more numbers that come on, the more likely is that you're going to start to get price cuts. And I'm already starting to see that all over, where you're starting to see people, I'll still say people list their houses at a pretty expensive price. But 2 years ago, if you were trying to buy, you would not even remotely see a price cut. And everything went on contract within like 15 days. Like it was, I don't even think I ever saw a house last more than 15, 20 days on the market 2 years ago. Now you're starting to see price reductions again. And this is price reductions in the springtime. Usually don't see a lot of price reductions until probably like the September timeframe. So all the data is pointing to softening of shelter, softening of labor, and probably softening of goods and services if the consumer ends up getting tapped by rising unemployment, and at the same time all these other obligations that they might have taken on during and basically have been just chilling on since COVID. I mean, student loans, if you think about it, a lot of people have like my wife's student loans are about, I think like $500 or something like that. But a lot of people that are in her same class, they have almost like $1,200 in student loan payments. So imagine right now you sap away $1,200 a month from a person's gross net income. That's a pretty big amount.
What did you make of the new home sales data yesterday? Was that kind of an anomaly that we sold that many houses, or how are you thinking of that?
No, I mean the new home guys, they've been doing things like rate buy downs, and they're a lot more creative when it comes to the financing and getting homes out the door, right? So I think they're a little bit of an anomaly. For me, I'm just looking at total inventory. The more I see total inventory growing, and then there's certain parts of the country where inventory is not only pre-COVID, but actually like way beyond what it was pre-COVID, those areas are going to get hit particularly hard. Like if you look at Florida right now, dude, it's the amount of homes on the market in Florida is insane. Same thing with Texas. Even California right now, you're starting to see a big pickup in inventory levels. So, I wonder how much of that inventory is actually going to end up getting consumed by the general public. Because remember, you need buyers as well as sellers. And I think a lot of people that are already sitting on 2.7% mortgage homes, they're not going to be like, oh yeah, you know what? I want a bigger house that's on the market. Let me give up my 2.75% interest to get a 7% mortgage on a different home. So I think now the more inventory is showing up, the lock-in effect is going to work, in my opinion, in reverse, where now the number of buyers that are looking for homes is not gonna be as high. And then you have all the things with deportations and basically the growth rate in the population shrinking to like, I think it's going to shrink down to like maybe 0.4% per year. So you've got inventory of homes coming on the market. You've got deportations and all these other things working against that. And also under the guise of deportations, a lot of maybe legal migrants may not want to buy homes. Like right now, if you're, let's say, working on an H-1B visa and you don't know if you're going to have that H-1B in, a year from now because of strict immigration policies, you may not be like, hey, let me go buy a house,
Right.
So
Right.
I think what we're seeing right now is a very interesting thing. I can't say this is going to happen and that's going to happen in the future, like with certainty, but I can say that from what I'm seeing in the data, you're starting to see disinflation become more prevalent,
All right. Last question for you, Kris. Google.
Just let me comment on one thing. This is
Go ahead.
why I think Trump made a mistake with the damn tariffs, man. If he hadn't done that, J Powell would have been like, yeah, we're cutting in May. Like we've already got to where we needed to go.
And then
you
he
could have done
the
all
tariffs
the
in the
other
fall.
policies. Huh?
You
Yeah.
could have done the tariffs in the fall, then. Yeah.
You could have done all the other things minus tariffs, and you would have got to get to.
Yeah, because if the number one concern is refinancing the debt, which they've talked about many times, you have to get the rate cuts. But if you put the tariffs up there, for good or for worse, it's going to make the Fed scared to cut. So my thesis is just wait until you get 2 or 3 cuts, which it seems like based on the inflation data we would have gotten, and then he could have done the cuts. But yeah,
Exactly.
Okay, Google, pump or dump? What are you thinking today?
I'm hoping it pumps, man. I think demand for AI agents hopefully is going to carry the day for these guys. My organization, by the way, ServiceNow, it's a brilliant company. My organization uses ServiceNow. One of these new features that we have is we have an enterprise service desk that we can use. You call and the person picks up and you tell them what your issue is or whatever you need. Now we actually have an AI agent. We also still have people doing the job, but we also have an AI agent now where you can just click on it, it goes to it, and it's like a chat bot. And basically anything you need, it will give you the answer to, right? And it does it in a very unique way. Like if you need a form to be filled out, you do this. Everything is a lot more streamlined, whereas before you had to actually have a lot more human intervention. It's really good in my opinion because, like let's say right now I need to open a ticket about something that happened in one of my applications. All I can do now is go to the agent chat and be like, I'm having a problem with this. Can you please create a ticket? And boom, it'll create the ticket. It'll have all my information, my contact information from my Active Directory account, my location, everything will go to where it needs to go. And now I don't have to sit there with someone on the other end and talk through the entire process, blah, 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 blah.
So it's real.
The
The ServiceNow is actually giving you guys.
Yeah.
ServiceNow is giving you real, actual value. It deserves to be.
Well, I mean, we always used it for our ticketing system and everything else, but now you're starting to see the AI portion of it come into the picture.
Right. Okay. So then for Google, I mean, you hope it pumps. Is there any fears you have that at this multiple it can still get worse, or you think it's cheap enough?
I think it's cheap enough, but once again, they've got litigation issues that are gonna definitely be a headwind for them. They're gonna have to deal with the fallout of what is that thing called? Google ad spending probably coming down with all the China issues, because Shine, Temu, all these guys were heavy ad buyers, and so if they're no longer presenting as many ads, that means that could impact some of that growth rate there. On the other hand, I wonder if they'll break out certain things with regards to Waymo, their cloud computing division, their AI division. I wonder if they'll even talk about maybe reduction in CapEx guidance and focusing more on share buybacks. I mean, that's a theory that I have, because I mean, right now with the valuation being where it is, you could actually deploy, Google has enough cash to actually expand their buyback program significantly, and it'd be value accretive to shareholders. So we'll see what happens with that. But for me, I'm looking at it and it's definitely a hit or miss. It just depends on how Sundar and the team can really communicate that. So even if your numbers are bad, if you can pull off an Elon and just basically just present a ton of optimism to the shareholder base, they'll buy the shit out of Google. So I think that's where sometimes Sundar falls a little short, where they're very bland. There's not a lot of excitement sometimes.
There's definitely not a lot of excitement.
When you compare the, I mean, Elon tends to overpromise, right? And Sundar underpromises, which is technically good long term, but when it comes to like reactions in the market, people are like, I don't really like feel this guy being like the smartest guy and giving me like a huge amount of return, even though he's probably doing a great job in the background. If you look at Google's operating cash flow, it's been nothing but a grower. Their businesses are great. Their operating margins have been going up for the last 3 years. So in terms of business performance, they do a really good job. But in terms of communicating that future like dream, they don't do as good of a job.
Yeah. All right, there we go. Christopher Patel, thank you very much. Appreciate it. We will talk to you next time.
Later. Take care, dude.
Later. All right, guys, I got to get out of here. I should probably pack and find my passport and all that stuff. Thank you, everybody, for being here. Palantir still up 104, NVIDIA 105, Robinhood just below 48, S&P up 1.4% on the day. Again, getting a decent chunk of what we lost yesterday. And it seems like it's based off that India headline and the potential for the market to think that the Fed is going to be more likely to cut. All right, that's what we got. Word of the day. I will be live. I'll be live on the market close. I want to say at 3 p.m. I honestly, dude, I can't promise it because there's just I would say aim for 3:30. We'll go live. There's just like a lot of stuff I have to get done, but hopefully like 3:15ish. And then we're going to do Google earnings, and then we're going to be done. Unfortunately, we're not going to be able to listen to the call, but probably will be done by around 4:20. Hopefully, starting around 3:15 for the market close. So we'll start earlier today, and we will be closing a bit earlier today as well. Thank you, everybody, for the safe travels. Appreciate it. I'm forgetting this is international, so I actually need some documentation and stuff because they're going to need to see all that stuff. But really, really appreciate everyone on the safe travels. Trump is speaking at 1 p.m., not 12 p.m. It was 12. They switched this to 1. So likely at 1 p.m. I think he's meeting with the Norway PM. He'll be speaking there. Word of the day is a wamble.
Wamble.
Of course. Why not? Why not would the A become a O, right? Why not? This is the American English language, right? Wamble, which obviously looks like, I don't know, wham bull, of course would be womble. This is just, it is what it is. To move unsteadily. After a long day of hiking, I will start to womble when I walk. The tower of wooden bricks wombled as the toddler ran past. Wamble sounds cooler. Wamble sounds way cooler. Obviously, this market has been wambling back and forth, up and down. It absolutely sounds like the market. And the best thing we can do is just try to navigate everything that's going on. All right. Thank you, everybody. Appreciate it. Means the world. I'll see you guys probably around 3:15 for the market close, and then we will get into Google. Thank you, everybody. Appreciate it. See you guys in a few hours. Bye, everyone.